Welcome to Marantz Rantz, no advice on finance. Spin the wheel and take a chance. Get an NFT and a little education. The system got undertold, that knowledge is flotation. You wanna learn? Well, you came to right place. You're pumping AMC, might get slapped in the face. Get your due diligence, know who the villain is. Don't be a sheep when the shepherd's carnivorous. So come learn, laugh, and maybe you win big. And listen up, y'all, the wheel is not rigged. Everybody get a chance in the live chat. Kyoto spin wheel, you win just like that. Retail fight back and this retail winning. Y'all just wait, man, this is just the beginning. All fellow simians, GME group singing the truth. We just chillin', infinity pool swimming. So welcome to Marantz Rantz. A lot of knowledge but no advice on finance. Don't even need pants, you can tune in naked like Henny the Mayo Man. Internet's most hated. Don't wanna lose your money, then it's time for you to listen. If you're ignorant, invest in AMC, a superstition. The stream about ready, they told us to don't dance. I do what I want. Welcome to Marantz Rantz. 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 Welcome to Marantz Rantz.
I was eating dinner. Stuck it all in there. Somewhere in there. Don't worry about it. You ain't kissing me. We might want to, though. You might want to kiss me. Real soon. Real soon. Welcome back. Welcome back to Marantz Rantz. Plenty of good information. A little bit of motivation. Whole lot of truth. No financial advice. Man, let me tell you guys. Oh, excuse me. So today, I'm having a Coke. You don't know what's going on here with me, okay? I'm a baller on a budget. Let me explain. So we had a party at my house. I can't remember what the party was. It wasn't Cinco de Mayo. It might have been something else. I can't remember what the party was. Mother's Day? It was Mother's Day. So my wife, she invites everyone, all the women over, and they have all these drinks left over, like a ton of drinks, right? Mind you, I paid for them. They didn't pay for them. But I'm stuck, like every good man, eating leftovers, right? Drinking all the drinks until they're gone. So right now I have a case full of Dr. Pepper, strawberries, and cream I'm trying to get through. It's a tough drink. Oh, it's terrible. And then I'm trying to get through these Cokes, which I'll do one a day. I can't do more than one a day. It's too much sugar for me. My body won't handle it. But I did run 1 mile, 1.75 miles today. I did that. Food. And I hadn't moved in a while. So I was moving. I'm still sweating. It's in my heart right now. Still, my body was hot. It's still, it's 100 degrees where I live. So, and I put on the suit and I went for a run. I was 2:55 when I left, 2:53 when I got back. So we'll see what I do in the morning. Maybe I go for another 2 miles in the morning before I go to work, and then 2 more miles after work. I think I can do that. I think I can wake up at 4 or 5, go hit the road, be back. It only takes you about 30 minutes max, with running and putting on the clothes and getting in position and having your phone, having some music, do something. But I got to get my body moving again, and I got to lose this weight. So that's the plan. All right, let's talk. Let's fight the funk. Let's fight the FUD. The fear, uncertainty, and doubt. Now, of course, you guys have been with me for so long. Cheers to you. There has been somebody who's been with GameStop longer than me. And I'm going to highlight him today because it's deserved. So, big shout out to my man from Wedbush. His name is Michael Packer. Now, Michael Packer, everybody says his name different. It's fine. I know Carter has done numerous videos on this scumbag. Something I'm going to pull up really quick. I'm going to pull up Wedbush short position on GME. And so I'm just curious if you guys know or knew what the Wedbush short position was on GameStop. In 2021. I'm just curious if you guys knew this. We're highly vocal about, don't worry, it's going to come out. From what came out in the GameStop report, if you guys are not familiar, Wedbush had a huge short position on GameStop. I believe it was over $1 billion. Yeah. Over $1 billion for sure. And we're going to talk about that and the reason why everything has gone on moving forward. So it was reported over $1 billion by Wedbush Securities was what was there. I'd have to go find the report. I just don't feel like finding it right now. You know what? You guys deserve it. I mean, this format is just me. It's just me, a dude. What was it called? The GameStop report? I have it in one video somewhere. The GameStop report. It won't. Whoa. What just happened? Whoa, my whole window's shut, bros. This is weird. Financial Services GameStop report. Is that it? Yeah. Hold on. Save. I'm saving it. And now I'm opening it. All right, so let's see if you guys can see it. Let's see what we have here. Told you it all closed. It was weird. How about that? So this is the Financial Services GameStop report. This is what was done in the congressional second session here, the 117th Congress, second session, June 2022. This is after September or January of 2021 and what happened. Now, I want to go in here and type in Wedbush. Wedbush, is it on here? Oh, it is 3 times. So Wedbush is in here to say that they had a position. I wonder if it's going to show the actual position. I got to find what page it would be on. Right there. So Wedbush, excess capital. Let's see what it says here. It says here approximately 90% of these charges were incurred by 8 member firms. So Wedbush Securities, all these other guys, okay. And approximately 75% with 3 members and Wedbush Securities. Got it. So it's not going to show me what they were managing. Some billions, no. Man, it's somewhere in here. Isn't it right here? It's somewhere in here for the excess capital requirements because those guys were short Wedbush, or they were short GameStop. But it's not showing me. It's just showing me that. But no, there's a chart in here. So you know what I'm going to do? This thing is long, guys. If you guys can pull it up at any time. This was awesome when I went over this. I don't know if you guys know when I went over this back in the day. This is the most amazing thing ever. This tells you why we're still here. If you don't know what's going on with GameStop, you should know. But I want to talk about Wedbush, for example, for a reason. Because they were $1 billion short on GameStop. We knew that part. But there's more to the story. And I just want to give it some background. That's what I was trying to do for you. But I wasn't ready. I probably wasn't ready to go live then, huh? Maybe I'll end this live stream. I'll come back to you guys. No? Somebody else have it? I'm looking. Because that's who benefited from the freeze or the position-only close, the POC, on GameStop. Just so we're clear. It was Wedbush who benefited from it, or benefited from the halt because they weren't going to lose any more money. They were already upside down, and it's infinite risk at that point on a short position against GameStop. But let's talk about what was deployed after the fact, before the fact, during, and what happens now for most companies that deal with GameStop as of now. I'm still going through this whole list. I'm sure you guys will find where it says Wedbush was $1 billion short. I know it's $1 billion, and I know it's Wedbush because I've seen it so many times in my head. That's why I don't trust Michael Packer. Now, let's talk about Michael Packer real quick. Now, Michael Packer is the only analyst that previously covered GameStop. So we're gonna expose some of that. We're gonna break some of that apart and why that matters. Because this is a position, and I think Kyoto talked about it in the Discord just the other day, just today actually, earlier today. So I can't wait till they have to unwind 10 to 15 years of bad business some swaps and all the rest of it. You know, you see guys out here who think the stock is not worth $25, like Mike in the float, whatever the hell his name is. You have somebody like what is his name, Richard Newton, who says he has 92,000 shares and he's going to sell them because he needs, you know, he just doesn't see the value of where it's at today. And then Michael Packer came out with the video tonight and said that he's ready to go ahead and tell you that Ryan Cohen's a con man and he's a criminal and all the above. So we're going to go over all that. I'm going to unpack a lot of these lies tonight. So if you're hanging out with me, you're going to get a lot of truth, as always. And that's why I always tell you guys, welcome back to Marantz Rantz. Plenty of good information, a little bit of motivation, whole lot of truth, no financial advice, but welcome back. Why does Marantz do that disclaimer? It's not a disclaimer. It's just what I say. I don't need a disclaimer. I'm just telling you what I do. I buy shares, I hustle, I work, and I use my money wisely. But let me see what I have here. By the way, I had spaghetti for dinner, for those of you that are asking. Spaghetti with my wife's meat sauce. Pause. I don't care. You call it meat sauce all you want. That's how good it is. Arrabbiata sauce with some meat, and there's nothing better. She made herself some tacos, but not for me. I'm going to see what I have here. So this is calculated and applied excess capital premium. Yeah, we knew that part. I'm looking because I knew these guys were upside down, 66 billion. But where in the hell is the Wedbush on the... There's like a chart like that shows you Wedbush way upside down, like $1 billion. I thought it was in this report, but I'm skimming through it. I'm going fast. I'm pretty much done with the damn report. So I typed in, you know, control, whatever it is. I got to look for them, and it didn't pop up. So I don't know where I have that list at. Somebody will come up with a list, and they'll show you how those guys are upside down $1 billion. Anyway, okay, so we got the rest of it. Enough of the bullshit. Let's go see what we have now. Hey, think about this. I read this the day it came out in front of everybody. That was pretty cool. You know, I'm going to save it. I already saved it to my computer, so I have it from now on. Forever!
Enough to
Forget this loser. Dude, guys like this, you know, they're really like 5'2". They got to be on the camera. They're terrible. Okay. Anyway, we're gonna get to the good stuff. So I apologize, okay? Shout out to my mom. Flying tomorrow to see her at this time. Can't wait to eat some chicharron. Congratulations. Marantz, you sporting a nice cut, bro. This is my hair. I cut it like 2 weeks ago, week and a half ago. Do my best. It was $1 billion so far. Yep. That was back then. That's fine. And yeah, it could be bigger. You don't know. Thank you for the $5 super chat there, folk. Appreciate you, bro. Always supporting me. And thank you for supporting the cause. Packer is back. Ryan Cohen said he's not passionate about GME like he is about eBay. Marantz, should we be buying eBay shares too? Bob, I don't know why your name is Bob Does GME. I'm going to tell you that's the dumbest question you could ever ask. Because, one, he didn't say he's not passionate like you think he said it. What he said was he didn't want the job. He doesn't want to do it. He didn't want to do it. It's retail. It's not what he does. He does e-commerce. It doesn't mean he's not doing a great job. And if you saw the deal, is eBay buying GameStop or is GameStop buying eBay? That should tell you what you should buy. You see, the biggest part that I hate about people like you, that you want to name yourself GME, Bob, let me explain something to you because now I'm pissed. Now I'm up. I'm going to explain this to you the best way I can. The same dumbasses like you are the same guys who bought Bed Bath & Beyond because, Ryan Cohen bought it. He's not the CEO of that company. He's not running that company. Why are you always trying to get ahead of something? Why are you trying to chase something? This is not something you chase. What are you trying to get? What side of the hill are you trying to get on? Do you not understand the cash we have and or the earnings coming out? Or anything that you're not giving value to that Wall Street hasn't given us value for. We got $20 billion on a letter right now. You know who can't get a $20 billion loan? eBay. That's who can't. When you think about how deep our pockets are, we have investors. And then we got you, punks like you, who type in the chat and say some bullshit. It's ridiculous. Oh, no, we're going to get another short squeeze over here. We got to worry about tokenized stocks. No. AMC Bigums puts out a whole video today about tokenized stocks in the market, and they got people, well, are we going to get cheated out of our money? Guys, I don't know what money you think you're owed. I don't know what you think you're supposed to get back on your investment. I don't give a shit. I don't. I'm rolling with Ryan Cohen. Rain or shine. Positive, negative, I picked Ryan. That's it. Whatever Ryan's doing, I'm fucking doing. Blindly. Remember that. You can tie your hitch to anyone. I'm tying it to the billionaire kid who's been right the whole way through, never did me wrong in the past 5.5 years. Somebody says, compensation package, Marantz. Look at this thing. Yeah. Do you not know how they set that shit up? They set it up with the idea of dilution. You think they just picked 17 million shares each tranche on purpose? Like, they just did that on an accident? It's all built off of anti-takeover measures. How he can actually get his position that he's supposed to own in addition to going the way he goes. Why do you think he offered bonds? Why do you think the float went from 304 to 448? 150 million shares. Ryan says, okay, let them increase it. We'll increase this. We'll do this. Why? Because he has investors. We'll talk about it in a minute. But Bob, do us all a favor. Change your name. And a matter of fact, Bob, just so that we're clear, are you there? Let me do this. Bob. Bobby. I want to make sure I got that right. Yeah, Bob. So you're going to have to only change your name because your name's stupid, okay? Bob does GME. No, change your name, but get a new account, get a new device, because you're gone, Bobby. Okay? There we go. By the way, I barely like anybody named Bob, bro. It's tough for me. That's it. I like Bob's Twin Kitchen. That's a great restaurant, by the way. All right, let's go do this without getting interrupted by the scumbags on the internet. Bob does GME. Bob does jack shit. That's what he does. So here's the video. You think I'm going to watch it? It's GameStop, but let's see. Watch this.
Unsolicited bid.
Shut your ass up.
Shane needs another box of macaroni and cheese. So make that happen, please.
Your dude needs another box of macaroni and cheese? You're some successful trader in stock, bro. Why couldn't you just give him some money? Or pay him something? I'm doing this shit from my house for free here, Michael Packer. The hell are you asking people to go ahead and do what exactly? I don't understand. You got this platform. You got 80 episodes in. You got more subscribers than me, which you should because you're well known. You have less views and interaction. I mean, you're trash. What's going on, babe? Hello? Oh, it wasn't shut? Here's my wife telling me my door wasn't shut. You didn't want to hear the show? You might want to get your cat. Ew? No, I'm just saying get the cat, baby. I'm good. I'm not dealing with people today. I have this dumbass in the chat. Don't worry. His name was Bob Does GME. Where did he get that name from? Why would you name your whole YouTube account Bob Does GME? What do you do, Bob? What does that mean? How about GameStop? Do you type GameStop or is it GME? I wonder why you use tickers. Anyway, so this is the show with Michael Pack that we're not going to watch. You know why we're not going to watch it, guys? We're going to watch it, but why we're not going to watch it right now? Because, Michael, before I let you speak on GameStop, we got to see who you are.
You have covered GameStop since 2002.
You've covered GameStop since 2002, Michael. 2002. Do you know it's 2026? 24 years, bro. How old are you? This dude, Michael Packer, right here, looks about 175. I haven't seen this dude. Look at this guy. Let's watch the video. I mean, Michael, by the way, I play everything at 1.5. That's how I catch up in life. I'm way behind. Let's see what you have to say then. The date, by the way, guys, this was March 26th of 2021, right after the squeeze. Let's see what Michael Packer had to say. Remember, he's defending Wedbush's short position.
Tell us about this call.
I actually think the company's going to remain solvent. They're going to probably grow earnings a bit on their current strategy, and then we'll see if Ryan Cohen's got something new for them to allow them to grow earnings more rapidly. The console manufacturers told us in mid-2019 that they were going to have optical drives in the new consoles, and they're there, which means that physical media will work in these consoles until this cycle's over.
Hold on. You're giving GameStop an increase from $16 to $29? Am I missing something? That's a massive growth, Michael Packer. Holy shit. Huh. Benefits from growing Ryan Cohen presence. By the way, Ryan Cohen, just on the board, not the CEO till 2023. Got it. They can retain market share, needs to scale e-commerce platform. Hey, believes they can grow earnings above market rate. So you believe in them. Did I miss something? Michael, this is you.
That gives GameStop about 7 or 8 years of runway to continue to grow earnings. They're the only place you can go to trade in games, and they dominate the used game market. About 60% of their in-store transactions involve trading credits. So I think that they're here to stay. I think people who value trade-ins are going to keep buying physical media.
So they're here to stay. Is this because the other board of directors or the other executives were in charge of GameStop at the time? Is that why you're promoting them? Was it the George Sherman and Matthew Furlong or Mike Recupio or whomever, Jim Bell? Is that what you're banking on right now?
Ryan Cohen is going to, turn the trade-in business into trade-ins for cannabis or something and accelerate earnings growth. I don't know what he plans. He actually tweeted yesterday a picture from Ted, a GIF from Ted of the teddy bear, smoking a bong and coughing. And either that means the bears are choking or that means he's taking me up on my cannabis suggestion. So we'll see. But I'm not willing to give them credit and take the target up to 175. My target is 20 times a pretty big earnings number, quarter, 2 years out plus cash. So I think that's real. I think that's realistic. And if Ryan
20 time earnings? You're thinking 20 times earnings. Okay. Okay. I hear you. Let's go.
Cohen tells me that number is going to be bigger than $1.25, great. I'll see if I believe him or not.
Michael, what are your thoughts about the earnings call earlier this week, them not taking any questions from investors or for analysts? Some might argue that's an important traditional part and necessary part of being transparent with the investment community. What were your thoughts about that?
It sounded to me like a hostage video. I realize it was audio, but it was like George was reading prepared remarks, no questions, no strategy. They're customer obsessed. I think that's awesome. Ryan Cohen came in late last year, said he didn't want a board seat, came in January 11th and took over the board. Apparently he's booting every board member off except him and the Hestia guys and their appointed board members. He said he'd have a strategy, and we got here 2.5 months later, no strategy. So I think part of the mystique of the stock is that people believe in the guy. And I think he owes investors the obligation to unveil that strategy. And I think a hostage call video with no Q&A was really lame. I think that the company has made a strategic error not issuing equity into the strength. They claimed that they had legal issues with it. They should fire their lawyers, and they should hire AMC's lawyers because those guys had no trouble issuing equity. They filed a 10K that day that said they're continuing to evaluate what.
By the way, AMC down 99%. They should hire their lawyers because they know how to dilute and issue equity in a squeeze? Huh. Why do you want them to do crime? It's okay. We'll keep going.
What the heck is wrong with them? And when I say hostage video, what is George Sherman playing for? He's got 2.3 million shares at $175 or whatever it's trading at right now. He's worth $400 million. Why is he still there?
Yeah, $400 million. Why is all the do you guys know this part? That all of the senior executives, the C-suite for GameStop in 2020 never sold their shares. They still have them. Guys, nobody's selling. People that were granted shares, all the bullshit, they would work there, they went out with golden parachutes, they don't sell their shares. I just want people to know that. It's awesome. Now there's no proof that they sold their shares.
He should resign, cash in his stock. Let Ryan Cohen run this company. Good for him. I don't think it's likely Ryan's taking the stock to 300. And I don't know what Ryan was playing for when he bought in at 8, but I would bet he's way above his initial price target, and I think he's kind of stuck. And so I just think the stock will return to earth when the shorts decide that they just don't want to play with the Reddit raiders anymore.
Michael, I'm going to spend most of the weekend trying to wrap my head around the cannabis play in this stock. I think it's genius. But let me ask you this. I want to understand where you're coming from here, because you're saying some nice things about Ryan, and you're saying some nice things about the company. You think they're going to have $1.25 of earnings in fiscal 2023. That's 2 years from now. But you are saying that the stock is going to crash down to $29 a share. Why on earth would I ever want to own this stock under those circumstances?
$1.25 in earnings per share. And their float was 66 million shares at the time. Okay? So don't think that's like a great thing. He's basically calling $75 million of profit a year. That's what he's going for at the time when he's talking about. Michael, you look like an idiot.
What is my long play here?
You have to buy into the initial short thesis, and I'll use his Safe for Television name by Roaring Kitty. That's not his name on Reddit. And he was right. He identified that something like a third of the stock or quarter of the stock was tied up by insiders and activists, and that the other 3/4 was over shorted. It was 118% short. And he said, gosh, a small increment of demand is going to drive the stock up. His original post to 30. It in fact drove the stock up to 300. And that was right. That was brilliant. And identifying a mismatch, a structural defect in how the short position was going to play out was brilliant. But why do the shorts keep coming back? And the answer is they're greedy. If they hated it at at 20. They hate it more at 175. But I think the shorts are going to continue to get their faces ripped off until they just say enough with this stock. And this is the one that's trading way beyond fair value. AMC is at about twice its fair value. That's not crazy. This thing is trading at 8 times. It is crazy. And the shorts keep propping up the Reddit thesis, and the Reddit thesis has been right so far.
And the world just keeps on watching. Michael Pachter, we're going to have to leave it there. Likes the stock
Thank you,
that goes to $29 a share at what point?
Shepard Smith here. Thanks for watching CNBC on YouTube.
Thanks. So Michael had it at $29 a share at that time, which would be the equivalent if you take $29, or let's call it 30, 28, I don't care. Divide that in 4, because that's what we did. We did a 4-to-1 split. You're looking at around, and I'm not good at the math part, but $7? $7 a share is what he's calling at that time. GameStop lost money in 2021. GameStop's not a profitable company at the time, and they had debt at that time. They went ahead and paid it off when they issued capital out and they sold. By the way, they did sell at over $200 a share, which is the equivalent of $50 a share today. So I think GameStop did amazing on the equity offering. But Michael Pachter, that was his story.
How hopeful are you about this new?
By the way, Michael Pachter, let's watch him. This is 2021 June. This is 3 months later. 3 months later, Michael.
Amazon team.
Oh, I'm actually pretty impressed by them. Ryan Cohen hasn't told us his strategy, but clearly it's to expand the e-commerce offering, and every single one of his new hires has been e-commerce background, 3 from Amazon. So, very capable executives. And, to his credit, running a $20 billion company is probably a bit more complex than running a $300 million company. He's out with the old and with the new, and, all these people are, 10 to 20 year experienced in e-commerce. So they're all going to be fine. I'm optimistic that they'll actually execute well.
And yet your target is $50, right? Which is well below the $220 it's trading at now. I mean, explain the gap between Michael Pachter and the investment audience.
I think that, as you know, meme stock is just something where people.
Hold on, let me see what
and
it
yet
said.
Your target is $50, right? Which is
$50.
well below the $220.
So this right here, he went from 29 3 months ago to 50. Think about that. He went up almost 100% in 3 months. Does that make any sense to people? How he went from 16 to 29 to 50, all in 2021. I mean, so from 16 to 50, that's 200%, 300%. You go up 100, that's 32. You go up another 48. I mean, tell me if I'm wrong on this. You're crazy. You're thinking it's great. Not that it's bad, but let's keep going, Michael. You keep getting it wrong. You're good.
It's trading at now. I mean, explain the gap between Michael Pachter and the investment audience.
I think that, as you know, meme stock is just something where people kind of talk about what could be. And in the case of a company like Tesla, going from 500,000 cars a year to 40 million is plausible. I mean, they probably won't do it, but they could. With GameStop, the meme is that they're going to transform the business and become some type of blockchain platform that trades NFTs. And I'm not sure how they get there. Ryan Cohen is not going to reinvent the company and turn it into Amazon. They're not going to sell a bunch of stuff. I know he's posted tweets of soft serve ice cream and Ted the teddy bear, hitting a bong, but I don't expect they're going to sell cannabis or soft serve ice cream. So the truth is, maybe they grow revenue by 10 or 20 or 30% more than I've modeled, and maybe they make $2 a share instead of $1. You can get to maybe $75, but you just cannot get to 200 unless you think revenues are going to triple or quadruple. And I don't see how they get there. When he tells us the strategy, maybe I'll accept it and agree with it and endorse it, but I cannot base, fundamental valuation on something I don't know anything about.
The GameStop memes, Michael, are out of control. My favorite is the Twitter account that is literally called Ryan Cohen is my dad. You have been covering GameStop since 2002. How are you watching this just incredible investor reaction?
Well, I mean, I think it's healthy for the market.
I heard.
People to get excited and, to bring new entrants into the market. When I got my COVID vaccine, the woman who gave me the shot.
Guys, I read it. There's 29 million shares of eBay now. I understand. Okay. And they call me when they get to 40. I need them to own 400 or 44 million shares. A little bit of increase, 29. That's not where I'm at.
Asked me what I did, and I said I work in the market. And she said, "What do you think of GameStop?" And that was mid-February. The idea that somebody sticking a shot in my arm knows about GameStop, and her kid is invested. That's awesome. So, I think anything that makes the average Joe aware that investing is an actual thing you can do is great. And I hope everybody who is long the stock gets out before they lose money. But it's stocks go up, they go down. I don't really care.
We're talking to Alexis Ohanian later this hour, who, of course, co-founded Reddit. He's a GameStop investor. He believes in it. What's the best case scenario here? The best case scenario that you think GameStop can actually get to?
I actually need to be practical here. If Ryan Cohen had some, transformational strategy to get into the blockchain business, what did he need to buy a chain of 4,700 stores for? Like, what's the point? And, he bought the stock at 8 and he only bought 12% of the company. If he really thought it was worth 3 or 4 or 500 bucks a share, why didn't he buy all the company? So I think there's a disconnect. And I actually think, in fact, he bought GameStop at 8 thinking he could take it up to 20 or 30 or 40, which was kind of the original Roaring Kitty, meme, Roaring Kitty thesis. I think that was right. I think it got away from him. I think his ego's gotten in the way, and now he's going to prove everybody, that he knows what he's doing. If there were a strategy, it's shocking that he hasn't told us. We were supposed to hear about this 5 months ago. What is such a secret? Did they have to kill us if they tell us? I am blown away that he's got a strategy that involves brick and mortar, and that anybody thinks it's going to take revenue at 4 or 5 fold. It's just not going to happen.
Okay, not going to happen.
Nobody is seriously looking at this as an investment. What I do tell shorts is to play the momentum. So on the way up, cover, and on the way down, short more. And I think that works. The volatility here is crazy. This stock has been as high as 60 and as low as 10 in the last 30 days. And it's right in the middle right now. So, what do? When it pops to 46, you short, and you can be pretty sure if it pops again, the management's going to sell some more stock. So, GameStop management is telling you, we think our stock is overvalued at 20, so we sold 45 million. We really think it's overvalued at 46, so we sold another 75 million. If management doesn't believe it's worth that, why do investors believe that?
Good job.
No, I would say it's a safe bet they will never make money from operations.
Hold up. I gotta go check that out. They'll never make money from operations. Just so we're clear. Operations, okay? I'll make sure we're looking at the right chart. We are. Good. Everybody's watching. Okay, so here is gross profit. Operations, okay? Then there's this thing right here called operating income. Bro, they'll never make money from operations. Check them out. And it's only going to get better, guys. But operation-wise, and that one right there, only because of this $35.5 million from Canada. If we didn't have that, we'd be fine. If we didn't have these other 19, 20, think about it. If we get back to 30, if we get back to 10, the 11, right? So that's already 20 million. We get back this other one, that's 55 million. What would you be if we added 55 to this? Anybody know? Operationally, 55 to the number you see. I see 100. I see 107. So 162 plus 135 would put us at $197 million. I'll call it 200 million for fun. So we actually make 200 million a year operationally, and you thought zero. 200 million. It's a big number if you understand it and you respect it and you do it. And I'm not even counting all of this gorgeous net income at the very end. And why? Because we have all of this interest income right here, right underneath it, which we're now getting bigger to this number because, yes, we're that guy. Yes, we're $92 million. $90 million a quarter. Times that by 4, that's 360. Plus the 200, that's 560. Do I get to count the $2 billion we're up on eBay? The $1 billion we're up on eBay? Do I get to put that in the math here anywhere? I'm guessing 1.6 billion a year. Just saying. They'll never make money. That's what I heard. Okay, Michael, we're still going with you, though, Michael. We're not giving up on you. Let's see what you got.
They had a super secret strategy, 3.5 years ago, hired a bunch of people, failed to execute on the strategy, and fired a bunch of people. So, you talked about the management team being silent. There is no team. There's the coach and there's no players. So no C-level executives there except Ryan Cohen, and he lives in Florida. I can see them slowly unwinding the business. They announced in their most recent 10Q they're going to accelerate the pace of store closures. So what you're going to see is a shrinking asset. The operations are going to continue to throw off losses. All their income right now is interest income. Ryan Cohen got the authority from the board to invest their funds. He's up to 4.6 billion of cash. So it's going to be a mutual fund, and he hasn't done that yet. It's a bank right now.
Great job. It's a bank right now,
They
just so we're
have
clear.
Not,
Ryan Cohen, just so we're clear, guys, GameStop, because he said they never be operationally positive, profitable. They make $200 million a year, operations, okay? The next part you said was, they're losers, whatever they're going to do, $4.6 billion. They're not $9.4 billion. Double. I know, it's crazy. I don't know how he did it.
they have not had an earnings call for about 3 years.
Cool.
My understanding is their annual meeting was something like 8 minutes long. He made a speech saying, "Thanks for trusting me," no Q&A. So nobody's allowed to talk to them. They don't have a C-suite. I mean, Ryan Cohen is the CEO. The CFO is some guy who got there 2 years ago as the controller. And since Cohen's fired everybody who ever worked there, they have a guy nominally as CFO and they have a general counsel. That's it. There's no COO. There's nobody who's doing merchandising. There's nobody senior left at that company. So precedent is, he's supposed to have all these people. And I think that he's nominally following the rules, but barely. So I don't think that he's committing fraud or he's going to jail. I think what's really sad is he floats stock and these idiots buy it.
Idiots. We're idiots now. And Ryan floats stock and Ryan doesn't have a C-suite. And what Ryan's doing is he's showing you that there's so much bloat in a company. There's just overpaid executives that do absolutely nothing. What do you need a chief operating officer for if the CEO is there? What do you need if it's a hands-on CEO, wants to know everything? Because there's so many steps that you don't need. If you're having a general counsel, it's great. If you have an accountant, what does he call it? He doesn't call it a CFO, chief financial officer, because there's other people within the company that do the math, that do the plumbing. So chief accounting officer, however he wants to call it. What's the best part about it is that when you take away the titles, you take away the entitlement. That's the best part about GameStop. And you think people know this part? They're running, it's best. He built a company from scratch, guys. He built Chewy from scratch versus Amazon. So don't tell me he doesn't know what the hell he's doing. He's just doing it different. And when you do it different from Wall Street, they get pissed off because they want more positions. They want more leverage. You want more votes. You want more control, more oversight. You want to be able to see how the sausage is made so that you can dictate who gets to eat it. That's the difference. That's what they're trying to do. They're trying to put people on the board of directors of this company to get in and weasel in and report back and say, here's what they're doing. Here's the plan. Here's this. Nope. Ryan's saying, nope. And those two dudes are well compensated. Mark Robinson, well compensated for what he does. And I'll tell you what, if I didn't believe in GameStop's fundamentals and the business and everything, and Ryan Cohen invested his own money, it's his money to lose. Michael, why are you so pissed off? Whose money are you going to lose?
Let's bring in Wedbush analyst Michael Pachter to discuss. He has a sell rating, price is $6.50, closer to.
So from $50, which would be $12.50, by the way, he came down to $6.50. We're going to talk about that in a minute, but this is 2023 now. We're in June 7th of 2023, Michael. Your story's changing for the worse while GameStop's getting better. Let's see what you have to say.
Closer to that, you're right on the sell. Is the dream over?
Oh, I think the dream never started. You guys have a documentary out right now, I think it came out yesterday, called The Meme King, calling Cohen a meme king. He's the Queen of Hearts. He was displeased and he said, off with his head to Furlong. That's the CEO's name that they shall not name. I mean, it's like if he said his name in the press release, he'd be cursed. They brought 3 Amazon executives in 3 years ago, and they managed to, one departed after 7 months. I think she figured it out quickly. The other was fired after less than 2 years, and the third one was fired after just under 3 years. So Cohen brings people in, doesn't actually tell them what to do, and they don't fix anything, and they're gone. I don't think he has the first clue how to turn this company around. And the truth is, I don't think they can turn it around. I think that they should be in harvest mode, trying to generate profits on a smaller footprint, and they're just not doing that.
So he said $6.50, right, guys? Just so that we're clear. At the time, GameStop's float was 304 million shares. That would put them at a market cap of $2 billion. $2 billion market cap is what Michael Packer was saying in 2023. I want to make that very clear to you. That's how disconnected he is from knowing anything about this investment. He said $2 billion. I want you to think about that number.
I mean, are they going to figure out how to be Domino's Pizza and not Blockbuster here somehow? Because so many trends in gaming are going against them. We just had Apple announce the Vision Pro. You can bet that's going to operate on an app store. You're not going to be going to GameStop to get games for your Vision Pro. And then you've got the cloud gaming and streaming happening. Microsoft pushing hard on that as well as others. What's the path to life here? What do they have to do?
So Cohen's solution is blockchain gaming. And of course, you know, if you own a console, an Xbox or a PlayStation, you think of GameStop first if you're going to play a blockchain game. You would never think to actually go to your PC. The guy has no clue, not the first clue. They are Blockbuster. And absolutely, physical retail is going away. It's not going away tomorrow. It's going away when the PlayStation 5 and the Xbox Series X are done with their life cycles. It's got another 5 years, maybe 6 or 7. But they should be harvesting that cash and trying to figure out what they can do with it. Instead, he's not paying his bills. Take a look at their accounts payable. 50% of revenue in the quarter is accounts payable. They literally have 6 weeks outstanding of payables. If they keep that up, no one's going to advance them any more product. So they're going to accelerate their demise. I think it's really crazy.
Yeah, I guess not paying your bills is tougher when you need to be advanced product. Elon Musk doesn't have that problem at Twitter. So this is tough to short, though, I imagine.
All right. So let's stop that one. Let's go in here. Let's go see what they were saying. Balance sheet. GameStop. If I go to GameStop's, they're not paying bills. Current liabilities. The company carries a sheet of 654. Guys, they have floated under $1 billion in current liabilities for the last 6 quarters. They're running their company at the highest metric. You're talking about producing cash like you wouldn't believe. They've got all this inventory they're running through, and they're going on 654 on current liabilities versus current assets of 10 billion. Oh, they don't pay their bills. If they don't pay them soon, they won't be able to float this company. Let me tell you what they could do with 654 million that they owe in liabilities, yet their assets current are 10 billion. That is quite laughable. Their current ratio is amazing. Current ratio is amazing. No company is like GameStop. No sheet is like GameStop. I just want to make sure that we know. Keep it real, bro.
Because there's a lot of excitement. This used to be a meme stock, so it could go any way on you, couldn't it?
It could, and it still is a meme stock. And you know, I think in the documentary, I'm not sure they use this piece, but I called him the Pied Piper. And the retail investors are the rats following him off the cliff, and they don't see it coming. They're happy. They're listening to his piped tune, and they think he's a genius. I mean, I'm sure he is a genius in other areas, not in games.
So what is the anti-GameStop, though? We know how you feel about that, but in this space, what are you extra long?
Activision, because the Microsoft deal is going to happen. Microsoft I don't cover, but Microsoft's going to absolutely dominate with Game Pass. I like the tools guy, Unity. I think they're really, really interesting here. For other reasons, I like Netflix as well. But Activision's the easy money, 80 to 95, probably going to happen in the next month or so.
Do you have a sense of what studio is best positioned in mixed reality?
Wow, you know, it's all going to be IP based, but I mean, you tell me. We talked about this past week about the price point. You know, how many Vision Pros is Apple going to sell? That's not going to be a giant install base for another 3 or 4 years. So Disney was smart to get in early, but game wise, I'd say the sports simulation games probably have the best chance of EA.
All right, Michael. So you've been wrong so far. Every video. Hi guys, welcome back to Marantz Rantz. Ooh, I did a video. Let's check me out at 1.5. Plenty of good information, a little bit of motivation, a whole lot of truth, no financial advice. We're going to go over this video right now. It's Michael Pachter. He's telling you Ryan Cohen doesn't have a clue. Ryan Cohen doesn't know what he's doing. And additionally, he calls GameStop the next Blockbuster, says they are Blockbuster. But here's the interview. I'm going to show it to you guys. Michael Pachter. Been covering GameStop for almost 2 decades now. He's on the short seller side because he does not believe in the company, doesn't believe in the business model, and he sure as hell doesn't believe in Ryan Cohen. But I've heard him badmouth GameStop for at least the last 3 years, myself personally. I've seen his price targets go from around $30 a share pre-split right now to be at around $23 pre-split because it's at $6.50 according to him. But we'll go ahead and look at it. We'll see what he has to say, and then I'll reply back to it. But let's play it in detail. Let's roll.
Bring in Wedbush analyst Michael Pachter to discuss. He has a sell rating. Price is $6.50. Closer to that, you're right on the sell. Is the dream over?
Oh, I think the dream never started. You know, you guys have a documentary out right now. I think it came out yesterday called The Meme King, calling Cohen a meme king. He's the Queen of Hearts. You know, he was displeased and he said, off with his head to furlong. That's the CEO's name that they shall not name. I mean, it's like if he said his name in the press release, he'd be cursed. They brought 3 Amazon executives in 3 years ago, and they managed to, one departed after 7 months. I think she figured it out quickly. The other was fired after less than 2 years, and the third one was fired after just under 3 years. So Cohen brings people in, doesn't actually tell them what to do, and they don't fix anything, and they're gone. I don't think he has the first clue how to turn this company around. around. And the truth is, I don't think they can turn it around. I think that they should be in harvest mode, trying to generate profits on a smaller footprint, and they're just not doing that.
I mean, are they going to figure out how to be Domino's Pizza and not Blockbuster here somehow? Because so many trends in gaming are going against them. We just had Apple announce the Vision Pro. You can bet that's going to operate on an app store. You're not going to be going to GameStop to get games for your Vision Pro. And then you've got the cloud gaming and streaming happening. Microsoft pushing hard on that, as well as others. What's the path to life here? What do they have to do?
So Cohen's solution is blockchain gaming. And of course, you know, if you own a console, an Xbox or a PlayStation.
Welcome to Marantz Rantz. No advice on finance.
I have no idea how that song played. We're over here looking at this, but Ryan Cohen tweeted. Here's Ryan. He's just a mean mugging dude, bro. He's ready to do it. GameStop. Let's see. Sweetenham. No, he sold more shares. We're good there. We're good. You guys are showing me stuff. GameStop Corporation. Copy that. Went ahead. Are they buying shares of eBay? They're buying more. You guys, what do they own now? 6%? 6 or 7%? What was the total? You guys, somebody wrote it. It was 655. We now own 655. Yeah, into the break. Don't worry. Ryan's over here tweeting. But the Discord tells me, because you know I don't have Twitter, so that's the way I'm living life these days. Back to Michael and my video. Let's see what we had to say. I don't know what it said.
You think of GameStop first if you're going to play a blockchain game. You would never think to actually go to your PC. The guy has no clue, not the first clue. They are Blockbuster. And absolutely, physical retail is going away. It's not going away tomorrow. It's going away when the PlayStation 5 and the Xbox Series X are done with their life cycles. It's kind of 5 years, maybe 6 or 7. But they should be harvesting that cash and trying to figure out what they can do with it. Instead, he's not paying his bills. Take a look at their accounts payable. 50% of revenue in the quarter is accounts payable. They literally have 6 weeks outstanding of payables. If they keep that up, no one's going to advance them any more products. So they're going to accelerate their demise. I think it's really crazy.
Yeah, I guess not paying your bills is tougher when you need to be advanced product.
We'll leave it right there. Thank you, Michael. You look surprised, as always. Never a good thing to say about this guy. He always speaks bad about the company. But I'm going to use the same metric they use, just so make everyone aware. Michael, you included this one take session. No edits, no cuts. It's for you. Wedbush, it's for you. You guys speak very, well, not so well about GameStop. But GameStop over the last 6 months, operational losses of $1 million. That is a net loss of $1 million over the last 6 months. I know, it's hard to believe. But with the cash burn that they currently have, they don't have. The marketable securities and cash on hand, 1.3 billion, ballpark in the number. GameStop would be in business for an additional 650 million years. So I'll let you keep saying your fairy tale. I'll let you keep telling the world that they're not going to make it, Michael. But they're doing well. Because what they have, and what you can't figure it out, is they have us. They have us gamers that continue to shop there and support that company. Not only buying the shares, but shopping there as well. I bought 2 copies, Diablo 4 right now. Easy. Easy work for me, and I get enjoyment out of it. If you think gamers are going to be strapping on a helmet from Apple that costs $3,500, you think we're going to adopt that idea over time? Well, you've got a lot more runway than 7 years then. That's what it's going to come out to. You're living in a fantasy land. You're shorting the stock. You're trying to destroy the company via the media. You've participated in numerous documentaries against Ryan Cohen, against GameStop. Your tape is written on, and so is mine. Because I'm going to make it my life's mission to keep making videos and to keep exposing guys just like you. You speak so eloquently about how their demise is coming and how they can't adapt and overcome. Look around you. There's one CEO out here with enough money in the bank to keep this company afloat. Additionally, he puts his money where his mouth is. But he's in his late 30s. That means if he makes a mistake and or if he fails, he could try and try again. Not you so much, right? You're on your way out. You're shorting the stock right now. You thought you won something? In the pre-market, GameStop was $20.01. It then has since bounced off of 17 million shares traded back and forth today. Touched all the way up to almost $22, almost 10% run today alone. Do you know why? Do you know why it runs that way? Because if you give us the dip, we're going to buy it. You have no idea who you're up against. You're in a dungeon. You're in a basement. You're not a gamer, but yet you want to speak on games. Do you know what GameStop's doing? I went to the store, Michael, today. Talked to the store director. Do you know what she said? She had no clue about the new game engine that GameStop's going to be launching, the game launcher. They had no idea about Player. You don't either. I guarantee it, you don't. You're not paying attention. You pay attention to headlines. You don't read the fine print. Michael, me, and a whole bunch of people just like me, we're the fine print. Get a clue, brother. I'll still be here. And the next video you make or the next interview you do, I'm right behind you. Get it right. GameStop. Can't stop, won't stop. GameStop. I'm not going anywhere. Get it right, millionaire. Peace.
Okay.
Welcome back to the watch list. I'm Nicole Pepper.
Before we watch you, Michael, I want to highlight some things here, Michael Packer, because these are the things I'd like to do. So since 2021, I have the data here. Michael Packer here and Edward Wu, his co-worker at Wedbush, now part of Ascendant Capital. Don't worry, they're both on the same timeline. they had a maintained position on GameStop of sell, strong sell, 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 sell. Look at the price points and how they increase over time as he's been wrong. Reiterates, maintains, reiterates, increase, 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 increase. We've increased 100% from where you were back here. How in the hell were you going to tell us to sell? But now you've increased, and now you're at $14. This is as of June 11th, 2025. What happened last year, guys? They suspended coverage of GameStop, Wedbush. That means no analyst covers GameStop. You know what's the most particular thing that I found amazing on this? To you, Michael, that you're giving them a $13.50 price target. We're going to talk about that. But this is the most amazing part. Out of everything you've ever talked about on stocks that you want to grade and upgrade. I don't even have to know the name of the stock. Do you see this? I don't even know the names of these stocks over here to my left. I don't pay the paywall. But it tells you maintained a neutral, an outperform, neutral, outperform, neutral, outperform. Are you catching? Okay. Have you ever put underperformed on a company? Every single one is maintains, reiterates, does. Only one company that you've covered in your whole history is an underperform. Is that not particular? Does that not rock people's brains? That this wonderful analyst maintained an outperform on Unity. He's calling for $39, and it's at $26 today. He called for $4 on AMC. It's at $1.36 today. Roblox called $110. Now that they announced that they're doing a share buyback, by the way, $46. GameStop, you said it's going to be $14. They're at $21.91. I know. Maybe these things here are backwards. Take Two Initiative. $269 you called for. It's at $242. $210 on EA. It's at $201. $9 on this one. Downgrade to neutral. Downgrade. You went from 21 to 9. It's at 10. It's still above where you think it's going to be. You called 77 on this. It's at $9. You called 7.5. It's at 96 cents. You have gotten literally every single one wrong. And I can go down and see it. You called 12, it's at 3. You called 13, it's at 6. You called 95, it's at 89. You called 32, it's at 26. You called 85, and it's at 124. Should we give it to you? Have I proven my point? Is anyone paying attention? This man has only downgraded one stock. He's only called it underperforming in the past X amount of years. Out of all the securities ever covered, it's GameStop is the hit piece. The only analyst to ever cover it, by the way, Michael Packer. Now, Michael, I'm going to leave these up here for us because we're going to read these soon when we watch your video. But here's a long one I got to get through. Well, I don't even know what it says. Should I even get through it, or should I just do my version of it?
Hi, guys, and welcome back
let's
to
see what we
Marantz
say here.
Rantz. Plenty of good information, a little bit of motivation, a whole lot of truth, no financial advice. I was at work all day, Michael Packer, and I saw you tweeting out tweets to me, and I didn't have time to reply. But here I am in front of you, and finally, you don't really understand who I am, so I'm going to give you that idea, or give you the answer of who I am, right? So you try to tell me that you downgraded GameStop one day, and that if everyone would listen to you, they would have made about 15% and or I don't even know how many dollars pre-split. Does it matter? No, because I'm not a day trader, right? I'm an investor, long-term investor. I believe in the company, the industry. I believe in Ryan Cohen, the leadership. So how are you going to beat me? How are you going to convince me that it's a $6 stock? You see, I'm going off of your metric. You guys called for $6, Wedbush. But the truth is, Wedbush is short this stock, what, over $1 billion on collateral? I saw GameStop, the report, and it said Wedbush Securities. You didn't have the collateral then. Do you have it now? For the short position that you carried. This is why you're the only analyst that actually rates GameStop. You yourself, Michael. No one else out there. There's what, Zacks? That's not an individual person. That's a group. So Zacks is out there telling you it's a strong buy. But when is it a strong buy to you? You're telling everyone to get the hell out of here? That a price target for $6? Well, let's see. Book value's at $4.15. You mean to tell me I'm going to buy cash with cash? I'm a regular investor, man. I don't understand how you can try to confuse people, but you can't confuse me. Cash for cash. You're talking about $4.15 is the book value for GameStop today. and your price target is $6. How would they ever get there? A cash burn of everything? How's that even possible? They just had a full fiscal wrap of a $30 million cash burn over the full fiscal year while still holding $300 million worth of marketable securities. So what the hell are you talking about? They're actually plus $300 million. But are you going to announce that? Are you going to report that? You won't, because you cherry pick your data in your moments to be this bear that you are. But let's go ahead and use your simple math. $6 a share, that's what you think GameStop's worth. But if I minus the cash, that means $1.85. You think it's only worth $1.85. You think the assets and a company that sells $5.8 billion worth of product is only worth what? $600 million? That's what you think they're worth at max? Oh, who's going to buy it? Everybody at that point, right? Even you. You're on the wrong side of history, and you always have been. But I know why individuals like you exist. Because long-term investors like myself that are 30 years, you're less, right? You're my senior 30 years. And I'm going to tell you something, old man. You need the money today. You need to cash out today. You need to show profits today, because that's your job. Short-term profits annually. You have to show some type of increase. I don't. I can sit here and buy all these shares at $14 every goddamn day of the week, because 10 years from now, what's $14? Zero. And I'll be up tenfold, because the company will still be running. And private equity is not involved. You're not allowed to come in. It's a do not enter here. Private equity firms come in, they leverage companies like yourself. They leverage them, and then they put out the FUD campaign, the misinformation campaign. You yourself, you partnered up with Edward Wu, a former employee of Wedbush. So the two of you guys, now with one individual firm, him and you guys both gave GameStop a rating of sell and a price target well below what it's worth for the last, 5 years. I've been paying attention. But explain it to me, how you and your buddy teamed up to give it this price rating, right? But now you're on Twitter bashing and going crazy and excited. Don't confuse them with logic. What's the logic? The logic that you might be wrong? I'd rather bank on this side of you being wrong, because guess what I had that you don't? Tread on the tires. I have nothing but time. And your time's up, just like every other hedge fund buddy out there. Just like all these old timers that are sitting here trying to count out and cash out. They're all trying to do the same thing, except you got greedy on one investment called GameStop, and the fundamentals alone are going to beat you down. Ryan's going to beat you. I'm going to beat you. I shop there. I buy my stock and I shop there. How are you ever going to win? You can't. It's inevitable. I look at you and laugh. Look at me. It's too easy. It's too easy. And I go to work. I have a great career. Take all my money, go down there, and I spend it happily. And I will, because I know what it's doing to you. It's eating you up. GameStop. Can't stop. Won't stop. GameStop. I'm not a day trader. I'm not a swing trader. I'm a decade trader. I'll see you around, punk.
Damn, I was good.
Well, when all was said and done, GameStop shares did surge today after the Reddit account that drove the meme stock mania of 2021 posted again what appeared to be a more than $116 million position in the video game retailer. Now, when the stock rallied a few weeks ago, following a related post, the company capitalized on the stock's jump, selling 45 million shares to raise nearly over $900 million. And Excess says GameStop could execute that same strategy again, and that there's nothing fundamental to support the valuation at this level. Joining me now is Michael Pachter, Managing Director at Wedbush Securities. He joins me again. Michael, I'm sorry to bring you out here every time we get this GameStop rally, because I know that we've talked in the past about the fundamentals, and you just don't see the business, doing well or possibly even existing. Just remind us your core thesis on GameStop.
Oh, sure. Their core business is that they sell physical video games. So they sell the physical discs that games are printed on, and they don't sell digital downloads. They can't. They can sell gift cards, but the console makers require you to buy digital downloads through them. So you can't even buy Madden Football from Electronic Arts. You have to buy it directly from Microsoft or Sony. So that business has been declining since 2013, since the console makers really put giant hard drives into their consoles, at one terabyte type hard drives. And so people download games, and we have a whole generation of gamers who just don't care about physical. The digital download is the same, exact file, costs the same. So the only advantage to buying physical is you can trade it at GameStop. That business is dropping about 3% a year. And in the meantime, GameStop has had to cut stores, shrink their store count in order just to stay afloat. But they're not profitable. Ryan Cohen came in and said he was going to make them profitable, and has not yet done so. And so the last time Roaring Kitty reared his very handsome head, he had a good thesis that Ryan Cohen might turn the company around and they would squeeze the shorts. That's dead. We're 3 years later. There is no strategy. There has been no execution. There's no senior management left at the company. It's a terrible company in a declining business with no strategy and no solution. But they have a lot of cash.
Yeah, that was going to be my point, but they have a lot of cash. So can they do something with that to turn around their fortunes?
Absolutely, and the cash is worth cash. So they have right now probably just about exactly $2 billion, $1.95 billion or so of cash, and they can buy something for $2 billion, and it's worth $2 billion. But the stock, at 30, I guess it's at 26 now. The stock is trading at something like $10 billion. So they have a couple of billion of cash, and they can turn that into a couple of billion worth of assets. Not worth $10 billion. And if there's a business out there selling for $2 billion that's worth 10, why don't we buy it? Why doesn't somebody smarter than them buy it? No, it doesn't exist. So yes, they can invest this capital and buy something that will keep them profitable for a long time. But are they particularly smart? Are they, do they have any competitive advantage running a different business? No. So why? I would say that the smartest thing they could do would be to try to sell the brand off and liquidate and pay the cash out to shareholders, in which case it's worth somewhere between $6 in cash and a couple of dollars for the business.
Which is where your price target is, at around $7 per share. Would you, though?
Worth $6 in cash. A net cash position of $5 billion would put GameStop at around $10 net cash position. I think it's like 1092 net cash right now. What in the hell are you talking about? 5, bro? You missed it again, Michael? Man, we're counting these losses. You've lost. You look terrible, by the way. Don't go on national TV looking like this.
Is this a smart short?
It's a smart short if you have unlimited patience and unlimited staying power. The problem is that I really don't understand the lemmings that are following Roaring Kitty this time around. The last time, in 2021, he was right. There was 100% of the share short. He forced a squeeze. Ryan Cohen said he had a super secret strategy, and he brought in a bunch of Amazon executives, and it sounded like maybe there was something there. Now, no, it's a smart short if you can just outlast the lemmings, but I don't know if anybody has the appetite for that. I think that shorts will short it on the way down, and they'll probably feel better shorting it at 20 on the way to 7 than at 20 on the way to 30.
Yeah, it's not going to 7. All right, let's see. Let's see what they got here.
Ladies, time to take a closer
Don't worry, it's
look
worth the
at what's
wait,
been
guys,
going
because
on
I'm going
with
to tear his
GameStop.
ass
The
up
company named
tonight.
new CEO before the market opened today. I want to welcome in.
There's a whole
Michael
reason why I'm
Patrick
showing
with
you all
us,
this.
Managing Director, Equity Research at Wedbush Securities. So, you tell me, were you surprised when Ryan Cohen, the current executive chairman, is taking over as the CEO? No pay. Ryan Cohen has been everywhere, as we know. He's had a long career. Tell me a little bit about what you thought.
Well, long career. I think I have shoes older than the guy. He's 38. So he's had some modest,
without a doubt.
He has invested in a lot, and he founded one that was great, Chewy, and he's gotten a ton of credit for that. Deserves it. He's gone in to tinker and try to fix Bed Bath & Beyond, and that failed spectacularly. And
he didn't go into Bed Bath & Beyond at all. He bought in. It didn't fail spectacularly. They pushed him out. They did what they do. Private equity is a piece of shit. By the way, GameStop was $17.02 the day you're making this video.
He's gone in to tinker and try to fix GameStop. The difference with GameStop is there's no debt, so they're not going to go bankrupt anytime soon. It's a slow bleed. Am I surprised that he named himself, that his handpicked board unanimously appointed him? I suppose I'm surprised that their candidate search found nobody that was willing to take the job there. When I say surprised, one would think, if he would throw enough money at a seasoned executive who wanted a CEO role, he might be able to attract somebody. But I think this is proof that there are no competent and sane people willing to work for him. So, he already ran through the competent ones who kind of stretched reason and took a chance, and they've all been fired. So now there's nobody who wants to go there just to be thrown under the bus. So Ryan Cohen was the only likely, candidate.
Did you have a lot of belief in someone that had been there and sort of was ousted? Was there anybody that you sort of had a lot of faith in and high hopes for?
Yeah, the guy that was there when Ryan Cohen took his position, George Sherman, was really good. And George was the CEO and Jim Bell was CFO. And those two guys had kind of orchestrated, masterminded the balance sheet cleanup, and they pounced when the stock ripped up. There's a movie out now called Dumb Money. The dumb money drove it way up. And they pounced and sold stock and wiped out their debt, and they managed the balance sheet beautifully. And their reward was they were allowed to accelerate their stock-based compensation and ride into the sunset with hundreds of millions of dollars each. So good for them. But they were competent. Then Ryan Cohen came up with the brilliant idea of be like Amazon. So he hired 3 very experienced, seasoned Amazon executives. The problem is nobody's like Amazon except Amazon. So they couldn't replicate it, and they were given the death penalty for their failure. Think of Ryan Cohen as the queen from Alice in Wonderland, off with their heads. He just executed them. And now who wants to come to work there? He's an unstable guy with no vision. And you have to toe his line. So no, there's nobody sane who would go to work there.
So at this point now, the new initiatives have failed spectacularly. You have Ryan Cohen running the show. Do you foresee takeovers, mergers, acquisitions? Are there parts of it that are worth anything?
Let me correct a term. Take under, maybe. Take over, no. Nobody's going to pay a premium for GameStop. It's worth $6 a share, maybe. And somebody might buy it for $6 a share because a competent retail management team could trim store count and manage expenses and kind of ride this declining revenue stream into prosperity and make money. He doesn't have anybody who's got good retail experience. He chased them all away. So no, maybe if he's willing to sell the stock for $6, but it's got to get to $5 before he's willing to do that. He is the dog that caught the speeding car, and he's hanging onto the bumper for dear life. This car is speeding away at 60 miles an hour. And he doesn't know what to do. He made himself the boss just to make sure nobody else knows either.
How wrong is he on this one, huh? You think someone wants to buy us for $5 a share? How's that working out for you, Michael? Dude, this guy's, as I'm showing you, he's never had the correct approach or mindset or view for what GameStop is actually worth. Is it on who could be this dumb? Who didn't see the sheet? Who didn't understand where GameStop was going? Who didn't go and shop there and eat, sleep, and breathe it to understand it? This guy didn't, obviously.
It hurts. It hurts because GameStop was a monumental, wonderful retailer for kids and people who loved gaming, and it was like the go-to place. Then came along digital and downloads, and they tried to give it a go a little bit to get in there, but what part of it could be salvageable in your mind? I mean, aren't some kids still with consoles and things like that?
For sure. And, I think of GameStop and physical retail the same way I think about movie exhibitors. There's a place for them, and there always will be physical sales so long as it makes sense for the game companies to put games in physical format. So GameStop can survive, but not in its current form. It's got to be much smaller than it is now. And so think about movie theaters. They can survive too if we trim out the unproductive ones. And that's really what GameStop should be doing. So get somebody like, I hate to say it, Adam Aaron to run GameStop. He would figure it out. He would actually do the right thing and trim the store count. You don't have that guy. So I don't think it's going to happen.
I mean, at this point now, how do you feel about gaming and retail overall? I mean, the two don't even really necessarily go together anymore, right? I mean, unless you're running like a Dave & Buster's where people go and play video games, with a joystick.
Yeah, games. I mean, the biggest problem with video games has been that it requires a pretty expensive hardware purchase up front in order to play. So either a good PC or a console or a Switch. And, I think that Microsoft has figured out that we're moving away from that, and they're going to make games available on any screen through streaming. I think that's the future. So the guys who make the content are going to thrive. The Activision is now being acquired, and Electronic Arts and Take-Two and Ubisoft are going to kill it. But I think that the hardware companies are in trouble, and I think the guys who sell physical goods are in trouble. So we're going to continue to consume the content just like we consume movies through streaming. It's great for the consumer. It's not so good for the retailers.
Yeah, I love what we're talking about. So Ubisoft, which obviously is a beneficiary of what's been going on here with Microsoft and Activision Blizzard, right? And then you mentioned Take-Two and EA. It sounds like those are all in pretty good positions. Do you have any buy ratings? I know you're saying GameStop is doomed. Do you have any buy ratings or any of those names that you do like right now?
All of those, and I think Take-Two is just an extraordinarily well-run company. EA is pretty well-run, but they have a very heavy dependence upon licensed content. Ubisoft's the one that nobody seems to understand. They win so big in this Microsoft Activision deal. They are getting global streaming rights to all Activision and Blizzard content, and that's pretty material. And they're going to obviously sell it to Microsoft on an annual basis and probably pay what they're getting back for that. But they gain the ability to stream in Europe. And so Ubisoft can start delivering Call of Duty to European subscribers for $5 a month. Why would you not do that? If you got Call of Duty and World of Warcraft for $5 a month instead of buying them separately, I think 10 million people will do that. So I think Ubisoft is positioned to hit a grand slam, and the market hasn't figured that one out yet.
Yeah. All right. I will continue to watch Ubisoft because obviously I know I've seen it and how it has been doing well on the heels of trying to get this merger to go, the Microsoft Activision merger, to finally get all the approvals it needs. So you basically today say if GameStop at $17, people should sell it really and take the $17 because your price target is $6, and if it's going to have a take under, someone comes in and says I'll buy GameStop, it's going to be less than that. Michael Pachter, it's great to chat with you. Key story.
Thank you.
So
is it though? Because GameStop went ahead and went from $17. Right after this interview, by the way, guys, this interview, just so we're clear, September 28th, 2023. After this interview, 6 months later, 7-8 months later, whatever it may be, GameStop went all the way up to $60-something.
So glad you were able to come on with us today. Thank you very, very much, Michael Pachter of Wedbush.
So he's been wrong again. How about you, Michael? What you doing, bro? Michael.
Hey, fellow babies, if you're wearing plaid, time to change your shirt because my entire crew is wearing plaid. Welcome back to the Pack Attack. Our next question from Twitter is from @BarryScottClark, another guy using his real name. Love that. You have 3 last names and also 3 first names.
So from 2013.
Kind of hard to do that. You think the parents would give you at least one name, it's only one or the other. Mr. Pachter, you ever see Nintendo going the way of Sega and having to exit the console-making business? Having to. No, never. Wanting to. Not while their biggest shareholder is Mr. Yamauchi, who I believe is around 70, 71 years old, and not while Mr. Iwata is CEO. I think those two guys are deeply rooted in tradition in the past, in what made Nintendo great. And I think that the Nintendo formula for success for the last 35 years has been manufacture a console, sell it at a profit, and support console sales with proprietary software. And then when your console sells well, collect royalties from third parties for the privilege of putting their software on the console. I think that model is broken for Nintendo. I think Nintendo is no longer able to compete the way they did in the past and sell their consoles at a big profit. I think that the Wii, when it first launched, they were probably making about $100 profit per unit. I think the DS, when it first launched, was probably generating about $50 a profit per unit. The 3DS, I think, is barely making a profit. The Wii U, I think, is barely making a profit. I'm talking $5 or $10 per unit. So Nintendo's hardware profits are so low that it really doesn't make sense for them to be in the hardware business, but I don't think they realize that yet. And that's a business decision. So this is a criticism of Mr. Iwata, not of Reggie. Reggie and the marketing team, they're great.
Reggie and the marketing team, they're great. Pay attention, guys.
they do what they can. That you have to play with the cards that you are dealt. They're dealt the Wii U. They're going to do the best they can to market it, and they're the best they can to get you excited about the software. So I love the U.S. marketing guys. I think they're phenomenal, and I have no problem with any of those guys. I think Mr. Iwata is a pretty poor CEO. I think he's done a very poor job running the company. I have a neutral rating on Nintendo, but I have to say only because their cash level supports their current share price. It's a bad company that doesn't make money. Your question, will they have to exit the console making business? The good news is Nintendo has something around $8 or $9 billion of cash on their balance sheet. When they lose money, they lose something like $1 billion. They're not, and frankly, I think next year their losses will be smaller. I think if they lose money, it'll be $100 million, $200 million. They can run for 50 more years and keep losing money, and they're not going to go out of business. So they aren't forced to do anything. Mr. Yamauchi owns something like 16%.
Isn't that
So
awesome?
this is a criticism of.
Isn't that awesome? He says that they could run for 50 more years because they have $8 to $9 billion. They lose $100 million, no big deal. GameStop does that, it's the end of the world. This guy doesn't call anything. He called Nintendo wrong, by the way. He called it totally wrong because they're innovative. They actually produced the Switch, the number one selling console of the last 5 years. Everybody buys the damn thing. But you know what's even more crazy than that? That I've never seen this video. I just put this video up tonight, right now, because I was getting all Micro Packer videos, and I go, oh, here's one. Let me see what he had to say. I had no idea this was going to be here.
Mr.
You guys
Iwata,
know this?
Not of Reggie and the marketing team.
This mother sucker. When they go, hey, the marketing team at Nintendo, I love it, the U.S. team, blah, blah, blah. Do you know who Reggie is? You guys have any idea? This is crazy. Pros. Reggie. GameStop. Board of Directors. Yeah. This son of a bitch was there March 2020, and Ryan Cohen kicked his ass out. I knew it. I know who this guy is. I know exactly who he is. He's one of your guys, Michael Packer. Michael Packer, this guy comes from Procter & Gamble, Pizza Hut, Genesis, Derby Cycle, Panda Express, VH1. I know exactly who this son of a bitch is. No wonder you're so nice to him and you like him. Nah, I know the difference. Yep. I know exactly what it is. And you're just sitting over there on the other side of the table. This dude, one of the ugliest dudes I ever seen, bro. Ugliest I've ever seen. Good for him. But I know the truth. I knew what it was. And now I know why you're so excited to see him. Dude, if this man ever pulled up to your house and you were like, hey, he's going to date your daughter, and you'd be like, bro, this dude looks like a video game character. Like Bowser. I mean, that's what they made the damn video games off of. Dude looks like Crash Bandicoot. All right, let's go to the next one. Sorry, Michael. That triggered me, bro. Explains a lot right now.
All right, fellow babies. Welcome to the Pack Attack. We're operating under new ground rules. No whining, ever. Don't want to hear it. Won't be tolerated. Your Pack Attack feed will self-destruct if you even whimper while watching it. Don't want to hear it. This is from my friends from Brazil, Andre, Hupsel, and Vitor. Profit deal, baby. Love these guys. No whining. Don't want to hear it. Welcome back to the Pack Attack. From Twitter, we have a question from @DecuSpliff. How do you think GameStop will alter its business model as physical media becomes less relevant? It's already happened. You know, we've started to see migration to digital. Certainly see.
By the way, I already talked about it, guys. I know you guys are talking about GameStop putting out a new 13D. We already talked about it. They bought more shares of eBay. Oh, wow. They own 6.55%. Okay. They have to buy more. They have to keep doing what they're doing. They're fine. That's it. It's very simple. Ryan's applying pressure. He has to do a certain share count to become a principal investor. There's just a lot that goes into it. So I'm not going to care about the filing. I'm not going to care about anything until the deal's done. That's that, guys. I already told you and we're going to talk about it in a different way right now when we talk about this new video from Michael Packer. I'm going through all the old ones just so you can see how wrong he's been for the last 15 years about GameStop, about other companies, about other investments. This guy's never gotten one thing right. Not one.
seen migration of handheld gaming to digital. PC gaming has gone about 70% digital. GameStop's been smart. They haven't opened new stores in the last 2 or 3 years. The only new stores they open are to replace old stores. But net, they've been closing about 100 to 200 stores a year for the last 3 or 4 years. I do think there's an opportunity for GameStop to expand in Europe. So I think you might see them expand into a country like Germany, where they have a very small presence. Probably Scandinavia, where they have a relatively small presence and they're pretty strong, profitable markets. But in the US, I think they continue to shrink their footprint. That is one way to address declining.
This is why he's big on Ubisoft, by the way. He's got an Assassin's Creed poster behind him. So, yeah, Ubisoft's in his pockets. There you go.
Physical sales. The other thing that they have going for them is that all used games begin their lives as new games. And so as new game sales decline because of a migration to digital downloads, there's less potential for used. That doesn't mean there's less demand for used or that there are fewer people who value used game trade-ins and credits, which really tells me if 30% of all new games are traded in for used game credits, that 30% of new games purchased are purchased by people who care about used game credits. And if new games decline by half, I don't think that used declines by half. I think instead of 30% traded in, it'll become 60%. I think the last man standing who buys physical copies is the guy who trades in, which suggests to me GameStop is going to gain market share as Best Buy and Target and Walmart de-emphasize the category.
How do you talk out of both sides of your mouth? You said this shit 15 years ago, and yet you say the total opposite the minute GameStop's in your shorts. Like, the minute GameStop rocket back up to an unbelievable price, you have to go into the FUD campaign, Michael. You were just saying that the digital downloads is the reason why GameStop's going to thrive. 10 years later, it's the reason why they're done.
Category because sales are going down. So I don't actually think GameStop needs to adjust its model much other than continue to offer different products for sale in the store. They're right now offering used consumer electronics, so mostly iPhones and tablets and iPods. That can be a huge business. If they get the word out to gamers that, when your mom or your sister gets a new iPhone, poach the old one and we'll give you $100 for it, a lot of gamers are going to poach the old one and get $100 for it. I think that's a huge opportunity for them. And a lot of people like buying used iPhones because they can't buy a new one if on the postpaid plan if they don't have credit. So if you don't have credit, you have to buy a prepaid plan. If you buy a prepaid plan, you're not getting a discounted phone. So GameStop can sell an iPhone 5 for $400 instead of $650, and that's pretty meaningful to a lot of people. And they'll give you $200 or $300 trade-in credit for it. So worth a lot when the iPhone 5S comes out and the iPhone 6 comes out in September. Here's a blast from the past. So from the Ask Back forum, from Atwa. How much did the infamous Red Ring of Death really affect this generation? There was a while when you could hardly mention the 360 without also mentioning Red Ring. Today it seems almost forgotten. With all said and done, did it affect the success of the 360 or not? I think that's a good question if somewhat dated.
Yeah, we don't care what you think because you've been wrong again. Next.
What if I told...
We're not there yet. All right, here we go. So now that we know this dumbass has been wrong for a century, lock in. Michael Packer has a new video tonight about Ryan Cohen and the lack of success and or the failure of GameStop. Let's do it, Michael Packer Factor. Are you copying me again? Is that like Marantz Rantz? Is that what we're doing, Michael? All right, you guys ready? Are you guys all buckled in? I got to make sure. Did you guys get your drinks? Okay. Yeah, we know. Whiskey. Why do these guys talk about nonsense? I've already said it 4 different times. GameStop owns 6.55% of eBay. So? We have shit to do here. We got to go out here and tell you what Michael Packer's lying about. Lock it in. New video tonight. This came out 10 hours ago. Michael, how don't you have 1,000 views? Why don't you do 100 views an hour? How's that not possible? How's that not possible?
So, GameStop made an unsolicited bid for eBay. They decided that eBay at 100, which, look it up, is eBay's all-time high share price since it was founded in 25 years. That since it was at its all-time high, GameStop decided to pay $125 for it. So they made a bid to buy eBay for $125 a share. Ryan Cohen, the I don't know how to describe him, CEO of GameStop, who has taken advantage of GameStop shareholders 3 times at least by issuing stock at inflated prices. GameStop has done at least 3 or 4 share offerings. They have...
Hold on. You're saying it's inflated prices. What you said in a video that I just played was, if GameStop executives were smart, If Ryan were smart, he would deploy shares, equity, cash. He would deploy equity, a position, an at-the-market offering at the heights of the stock. He's done it 3 times to the shareholders, allegedly, and they raised billions and billions of dollars to do it, but that was a bad thing to do. We're the ATMs. I think we need to know this. How much did GameStop dilute their shareholders on ATMs? At the market offerings. 150 million shares? Yeah. 150 million. The bonds are a little equal to that as well. So now we're sitting at like 591 plus warrants. Comes out to around 650, 640 total float. But here's my problem with that statement that you're making, Michael, is that Ryan Cohen is the largest shareholder. He bought the most shares. No matter how much you think he's taking from us, he's taking from himself. He put in $20 million in January. How am I going to get mad at that? I'm just happy to be along for the ride. I'm Kanye West before I became big. If you don't know that song of that story. I'm just on the train, man.
Taken their company's balance sheet from a net debt position. They owed about $1.5 billion to a plus cash position of $9.5 billion. So they have literally, not exaggerating, raised $10 or $11 billion by selling new shares. Their share count has popped from 75 million to, I don't know, 500 million, that's something way up there, 400 or 500 million. And they sold all those shares at, 30, 40, 50 bucks. Stock's at 25. They kept.
That's a good thing. Stock's at 25. Stock's at 22 today. They sold their shares at 29, 28, 20, 21, 50. Yeah. You guys don't know. They sold their shares at $215 a piece in 2021. We were all here. This is awesome. What are you mad about?
Kept selling stock whenever it popped. And the people who bought at 35 are screwed. And the guys who are GameStop faithful who bought at 5 and 9 think they're geniuses. But
I don't understand. Do you think people just buy it once and that's it? They bought it at 35. They're screwed. Why wouldn't they average down? If they've been believing in the company and the stock and Ryan, and they see improvements on the fundamentals, the sheet looks better, they raise more money, they announce they're going to buy eBay. Wouldn't that go, okay, you know what? I need to put more money in. I agree with this investment. I think this would be a good thing. I think everything's right. Or are we just buying peaks? Because GameStop peak price, right? Peak to trough. If we're thinking about the stock itself, I could go ahead and look at it. Let me just go make sure I pull it up. The high for the last 52 weeks is $35. The low is $19.93. So if I bought it at the 35, it means I bought it at the peak. It's only been there once. Why would I just have the worst timing ever? I bought it at the peak of what it is over the last year. Is that what you're saying, Michael? We're trying to figure you out. This is a current video. This is today.
But that's called a pyramid scheme. You keep bringing in new people at higher prices and the stock goes down.
Hold on. A pyramid scheme. That's what you said.
They kept selling stock whenever it popped. And the people who bought at 35 are screwed. And the guys who are GameStop faithful who bought at 5 and 9 think they're geniuses. But that's called a pyramid scheme. You keep bringing in new people at higher prices and the stock goes down.
And what do you mean the stock goes down? Hold on. Michael, I'm trying to figure you out, Michael. You called it a pyramid scheme? Okay. Maybe I'm missing something here. I'm going to go look at the chart really quick. Okay. And I want to go look at the biggest pyramid scheme of your lifetime. The SPY? We keep bringing in people at the top, and then we knock it down, and then we bring them in at the top, and then we knock it down. I mean, look at this shit. Rinse and repeat. You can literally see it. You can see every hitch. 1, 2, 3, 4, 5, 6, 7. I mean, they just dip, right? 8, and we're on one right now. Just dip, all the way up. We're dipping up. Max 7. This is a pyramid scheme, this NVIDIA stock. Why in the hell would anybody buy it in this past day at 236? If I go into the after hours, I go to the 1 hour chart, peaked out at 241. Damn you, Somebody went and bought NVIDIA at $5.5 trillion market cap, and now they're down to 221. How did it go $20 down in 3 days with earnings coming out, which it did come out, and you're going to tell me earnings are tomorrow, and you're going to tell me that they've lost $500 billion in market cap in 3 days. Where's the outcry here? There's some criminals here. Guys, this is a death cross on the 1 hour on NVIDIA. But earnings are coming, so that means a lot to somebody. They're already on a death cross on the 1 hour. But Michael says it's a crime. GameStop, pyramid scheme, whatever the hell he called it. Stupid.
He said he's going to buy eBay for $125. Well, what does that mean? eBay trades at about $55 billion. So to buy it, GameStop has to come up with $55 billion. And Ryan Cohen said, we're going to do it with half cash and half stock. GameStop has $9.5 billion of cash. Its shares are worth $11 billion. And he has a $20 billion line of credit. So that adds up to $31 billion. Where's the other $26 billion come from? $24 billion. You're going to pay 55. Where's the other $24 billion come from? And Ryan Cohen goes, half cash and half stock. So there's a new meme been born, half cash and half stock. I'm going to buy a new car with half cash and half stock. I'm going to buy a new house with half cash and half stock. Imagine that. Let's say my house is worth $2 million and I want to buy a $4 million house. I'll just tell the new owner, the seller, I'll give you half cash and half stock. You can have stock and I'll give you my $2 million of cash. They would never sell their house to me because I don't have $4 million. That's Ryan Cohen.
So I'm tired of this analogy, guys, that everyone keeps doing with the house. It's not fair because the house is not a business. But we'll use the same analogy. And if you offered someone, they had a home that was worth $1 million, and you walked in and you go, you know what? I'm going to give you $500,000, but I'm going to let you still live here. Do you understand? I'm going to let you still live here, but I'm also going to go ahead and come back to you and sell this house 10 years from now, and we're going to split the profits. I mean, that would be the equivalent, but that's not a real thing because the business generates profits every year. So GameStop offering X amount of dollars and then their shares. You think eBay trades at $100? You just said the $100 flat is the highest it's ever been, and that is correct. It's the highest it's ever been. But now it's propped up on this premium because we propped it up by buying it. You want to tank the shit? We could sell 6.5% right now. I'll let you know where it goes because it's not going to be $100 a share. The value of that company is inflated to what we made it. So giving you a premium of 46% over the $85 a share on average, what we have, that's healthy. To give you equity into the combined company is healthy. Yeah, we're going to give you half cash, half stock, but that stock is derived from the value of what we would call goodwill appreciation and or acquiring the goodwill to our sheet. So that infinitely puts out $48 billion to the asset line of GameStop. Therefore, your market cap is going to be what? If you're generating a profit of 2.5 with a promise to get you all the way up to $7 EPS. Are you understanding what they're telling you, eBay shareholders? The amount of profits that you can make with GameStop being at the helm is closer to $5 and $6 billion a year rather than the $2 that you currently make. That's 100% increase on earnings per share coming 60, 70% in the first year. That's how it was explained. But that's not how these guys want to tell you it because they're here to drive you out of the position. I'll explain more.
Worked hard your entire life and rewarded everyone else. But now it's time to reward yourself and contact Doug DeShazer to discuss buying your own slice of getaway paradise in Libby, Montana. Doug has an immaculate, single-level, 4-bedroom, 3-bath home with an attached garage, 2.7 acres, and a workshop to explore your hobbies. The Kootenai River is just 50 yards from the back porch. When it's time to reconnect, Stellar Internet is waiting. No matter where you're looking to buy, Doug DeShazer is licensed to help across the entire United States. Call 406-291-1643 or head to LibbyMontanaRealEstate.com.
So what do I think of it? I think he is a manipulative guy who has already purchased 5% of eBay. He revealed that. His 5% of their stock is worth a couple of $1 billion, $2.5 billion. I think he wanted to drive the price up as he did by 20% or so. And his $2.5 billion goes up to $3 billion. And I think he's going to sell it and leave the eBay shareholders, the back holders, and withdraw his offer.
How's that a problem? He offered a legit offer. He pulls it off the table. GameStop makes money. They earn it. It goes to their bottom line. What's wrong with that? Is he pocketing this money and taking it home? No. It's a GameStop investment, not a Ryan investment. Furthermore, if eBay doesn't think they're worth $115 and they're bag holders up here, then what the hell are you crying about the $125 he offered? It's not enough. Well, good. How about the $115 you're currently going to hold now? Oh, it's not worth that? That's his fucking problem? Excuse my language. I get a little bit upset when people talk backwards. They talk both sides of their mouth.
eBay is not accepting his offer. I mean, to quote the immortal Professor Scott Galloway, you are not serious people. That's what eBay is saying to GameStop. You cannot tell somebody, my company's worth $11 billion, but I'll give you $27 billion worth of my stock and $27 billion in cash, especially when you don't have $27 billion in cash. You only have 20. So I don't.
What do you mean they only have 20? They have 29. They have 9.5 plus the 20 in the letter. Of course they have the 27. You don't think their stock's worth that much? Maybe they're pinned down. Maybe. Just maybe.
Get it? I think Ryan Cohen is just delusional. I think he has no idea what he's doing.
Hey, I just want to point this out. This is why I went on a run today, okay? Because I can't ever, for the life of me, Michael, okay? I want you to look at your titties, Michael, okay? I'm not a big fan of looking at other men titties, but look at how your shirt gets tucked in underneath them. This is awesome.
I think Ryan Cohen is
just look at that crease.
Delusional. I think he has no idea what he's doing. Then let's examine the actual business synergy of GameStop and eBay. GameStop sells, content that they buy. They sell inventory. So they buy games and peripherals and trade-ins from third parties, and they stock it on their shelves, and same on their website. eBay doesn't buy anything. They are a broker between a third-party seller and a third-party buyer, and they collect a commission for that. How does it help having GameStop stores? Oh, I see. You can pick it up in store. Well, guess what? Amazon has had an eBay-like offering forever, for 20 years. And yes, you can pick it up at your Amazon locker, which is a lot of universities and a lot of Whole Foods markets. And Amazon can't make it work. But Ryan Cohen's going to figure it out.
Yeah, Ryan Cohen's going to figure it out because, one, Amazon can't make it work because they built the internet first. They didn't do the physical. They don't have the physical footprint it takes. They tried. They tried to buy it. That's why the fresh Amazon stores don't work. Amazon's always tried to buy physical. This is why Costco wins, just so that we're clear. Costco is going to transition into more e-commerce eventually because they're going to have to stop opening up stores. They're on a rapid increase to open up more stores, but it's their e-commerce that'll carry them over, and or the apartment complexes they're going to build on top, or the remote gas stations they're going to be building across California. Just gas stations, Costco, fuel. So these are the things they're doing. GameStop's doing the complete same thing. GameStop's expanding rather than just doing brick and mortar, which you've been complaining about. But why is it that one company has to fit the bill for another? Let Ryan do what he does. He's an e-commerce genius. That's what he is. And you're a failed mathematician. You've been wrong about every single investment you've ever talked about on the internet.
Then the other thing that's so stupid about this is Ryan Cohen implied that eBay is messed up, except at the outset of this episode I mentioned, eBay stock is at an all-time high. Clearly, shareholders think management's doing a great job.
You can't do that, Michael. eBay's stock price is at an all-time high. One, because GameStop buys it. And Ryan put it out there. He f***ed them up, okay? He's so smart. eBay announced that they're doing a share buyback program of $3 billion. They pay a dividend and they do share buybacks. You want to know why their damn share price has increased so much over this last year? Because they committed all their capital to buying it back. A la Bed Bath & Gone, who took all their cash and did share buybacks while the company was failing. There is no real growth at eBay. They've spent millions of dollars on marketing. They cannot acquire more members. They don't make more dollars per person. It's not what they're doing. They're spending more. They're in $11.5 billion of retail with a 75% gross profit, yet they're netting 19% on total profit. So how in the hell, where do you see 50% of it burning off and going? Ryan can fix that. That's the first thing. But for you to come out and tell us that the share price all-time high and that they're doing so well without us, well, we all know which side of the table you're sitting on.
So Ryan Cohen, instead of picking an undervalued company that is messing up, that he has a plan to fix, picked a phenomenal company that's executing flawlessly, and his way to fix it is wipe out overhead and use his store base. Not going to happen. So
my point is this: he's not going to tell you what he's going to do, because if he told you, then they would try it and they would fail at it anyway. You don't know what Ryan's going to do. 5 years ago, 6 years ago, when Ryan bought GameStop, took over, chairman of the board, CEO, all the good stuff, right, that he's done over these last 5 years, did you ever see him in there in the mix saying, I'm going to buy eBay? You never saw that coming, right? You never saw the profits coming, and then you never saw that coming. So there's no telling what he's going to do once you give him eBay. You can't even imagine it. You have zero imagination.
I think this is purely manipulative. I think when he raised all that cash and he told all these shareholders at 30, 40, 50 bucks a share, I'm going to redeploy it and buy an undervalued company, they expected him to buy a $9 billion company with cash.
You did. You thought that. Because if he bought an undervalued company, or he bought a company that was struggling and he paid $9 billion for it, that's a bigger risk than buying something that actually makes a profit, right? I'm not buying a fixer-upper. I'm buying the Bentley, babe.
Which makes perfect sense. Not a $55 billion company with half cash, half stock. This is going to fail miserably. There's no chance. Remember this, bookmark this right now. There is a 0.0% chance that GameStop successfully buys eBay. What should they do? I think they should just return the cash to shareholders. But the fact is that, the cash is worth less than the current share price of the company. The company is still getting a going concern value of $4 or $5 a share, $6 a share. So you would only get back like $17. So the question is, if you give him your cash, can he reinvest that $9.5 billion and make it worth 15 or 20? Maybe, but do something like pet food. Don't do something you don't know like eBay. So again, I am not a fan. I am an outright critic of anybody who thinks this guy's smart. He is not. I am absolutely skeptical that he will ever get anything done with that money. And I think if you hang on to GameStop, you're just going to watch the stock drift down to 16, 17, which is great. The reason your $4 stock is worth 16 is so many people bought it at 30, 40, at 50 that they provided that extra cash. So anybody who bought it for, you're way above water. Anybody who bought above the current price, you're underwater already, and it's going to get worse. Watch that CNBC interview. It'll make you cringe. He has not succeeded at anything, and in case you stop counting, it's been 5 full years since he took control of GameStop. He's a full-blown grifter, and
So he's been there as a CEO for like 2.5 years. I just want to put that out there, but he's a full-blown grifter. This is what this guy's saying. Hold on, I love this part. Let's hear this part. This is good, Michael. You're doing great.
You're underwater already, and it's going to get worse. Watch that CNBC interview. It'll make you cringe. He has not succeeded at anything, and in case you stop counting, it's been 5 full years since he took control of GameStop. He's a full-blown grifter, and again, he got lucky with Chewy, and God bless him, and he made $1 billion. And Chewy was a good idea at the time, and it worked, but he hasn't done anything since. And he did this thing with Bed Bath & Beyond. So Ryan Cohen bought stock in the low teens or mid-teens, sold at 29 after saying he was going to buy the company for 30, sold it all, and then the stock dropped back down and went bankrupt. Dropped back down to 5 and went bankrupt. And he's not in jail. So people are like, he's a genius because he made money in Bed Bath & Beyond, but he's not a genius. Okay, fellow babies, thank you for joining us on Packer Factor Live, and a special shout out to our Patreon patrons and YouTube subscribers.
Shut your ass up. All right. So let's think this through. He called it a $4 stock, which is fine. I'm not going to get mad. You know, there's cash here on GameStop. GameStop has a lot of cash. Okay. They're trading at a 28 PE ratio. So 28 times their earnings. But the idea behind valuation is just not earnings. If you had a PE ratio, what's the average PE ratio? So I had to go look this up because I wanted to make sure that the numbers made sense. So here it's going to tell you that the average index PE ratio for, it says here for consumer discretionary stocks, is ideally for the whole thing. As I scroll down here, it tells you that it trades at around 26.2 and or 31.9. 31.9 is the average for consumer discretionary. Now, just so we're clear, I want to use this metric and I want to go to the financials and I want to show you GameStop on a diluted share price of 77 cents per share, but 93 on the actual float right now. So 93 cents is what they trade at per share. So if I took it to $32, or I'm sorry, 31 is the PE ratio. So I'm going to do simple math for everyone. According to the earnings of GameStop, they should be trading at 93 times 31, 28.83. And that's where Wall Street buys it, by the way. That's where the bonds are. They're all there at that fair value of what consumer discretionary stocks are. Now, if we multiply that by the 448 million shares, I apologize, that's going to get you to 12.9. Everybody. GameStop's a $12 billion company, Marantz. That's what that proves. But that's just earnings. That's projected earnings and value. Do I get to add in the cash? Do I get to add in the assets minus the liabilities? I know there's a 0% coupon on cash. We don't owe it yet. So for the next 5 years, can we give them the valuation they deserve? Are we allowed to do it that way? I'd love to do it because I'm going to go ahead and put in $9.5 billion right now. That puts them at 22.4. S&P 500 inclusion? Let's divide that by the 448. 448 million shares. And that puts them at $50 a share. So, GameStop fundamentally, based off of their earnings and assets combined, which I'm allowed to do, don't let them tell you I can't. GameStop trades at $50 a share. Fundamentally, no speculation, no extra. That's just GameStop is a $50 a stock company. They're already trading or where they should be at $22 billion. And then we throw in eBay's overvalue because they're not a $100 stock. They bought it all back. So let's just call it $100 what they think they are. They should be trading at $40 billion. We're paying the premium just to acquire it, but we're going to own it. Whatever we pay for it, we don't lose value on that. That's what we don't do. So you'd have a $100 stock. Let me think about this for a second. I'm doing math really quick. You would have $48 billion plus GameStop real value, which should be 22. So you would have $70 billion company. GameStop, eBay combined, $70 billion. Now let's see how much earnings that produces. And GameStop already put it out there that they're going to come out and make essentially $4 billion off the rip. GameStop's going to make $1 billion this year, if not more. 1.5 billion maybe. Remember, we have a huge increase on this eBay position of 6.5. So let's just call it that we make combined, cumulatively, 5.5 billion. So if I go 5 billion, I'm just ballparking numbers here, because that's the numbers put in front of me that I know of. 5.5 billion is the earnings of GameStop after they own eBay. They get it for a year and they clean it up, whatever. I'm great with it. We're going to do the math really quick because you guys are with me. Now, the best part about this is, if it were that type of company, it would still be called a tech company. Would it be called a consumer discretionary company? What would it be called at that point? Well, I want to go to the 31.9 that I just told you about, okay? But let's go with different metrics. Let's go and look at the average S&P 500 stock, currently trading at 26 times. So if I take the 5.5 and I times that by 25, I'll be on the low side. That comes out to $137 billion. $137 billion company in 1 year from the minute they grab it and own it and fix it. They'll be worth $137 billion. Did I say billion? I hope I said billion. Oh, man. The average mid-cap company right now, by the way, trades at 21.5. Mid-cap 400. 21.5. GameStop makes almost $1 a share. They will after Q1 right now. Not if not more, because I'm already telling you. They're going to hit some shit on the sheet. But $1 means these guys are crazy. Right? I mean, GameStop's crazy at that point. They're going to be making $500 million. And times that by the 26, 21 mid-cap. I mean, they're really $11 billion at that point. Plus the 9, they're a $20 billion company. Any way you do the math. Any way you do the math. Your boy's done the math. You know what's crazy to me? What is this?
I think we could start with the idea.
Oh, we're not looking at that yet. We're not looking at any of that yet. Let's go see what this has to say. I think you guys should watch this video. I've talked about it, but this is the updated version that somebody decided to do to include GameStop as the overvalued stock. We'll play it at 1.5 like we do everything here because we're trying to catch up in life.
What if I told you that investing in stocks works exactly like pouring a cold beer? Sounds ridiculous, but in the next few minutes, you'll understand the stock market in a way that almost no one talks about, and it will actually make you money. Every single day, millions of investors stare at red and green numbers, obsessing over prices that go up and down for reasons that feel completely random. But beneath all that noise, there's something far more powerful, the actual value of the business underneath. Today, I'm going to show you how to separate the two, using one of the most powerful and overlooked analogies in all of investing. Picture a glass of beer. That thick, frothy head on top? That's the foam. It looks exciting, it's dramatic, but it's temporary. In the stock market, foam represents everything emotional. Fear, greed, hype cycles, Reddit threads, CNBC headlines, and pure speculation, pushing prices around every single day. The liquid below? That's the beer, the real stuff. It's built on a company's actual revenues, profit margins, brand strength, and competitive advantages, things that don't evaporate overnight. Here's the problem. Stocks aren't poured into a clear glass, they're poured into an opaque mug, like this. You can't easily see how much is real beer versus empty foam. And that confusion, it costs investors billions every...
See how they put GameStop? They're just trying to manipulate you, man.
Single year. In fact, research consistently shows that roughly 70% of active day traders lose money over the long run, largely because they're chasing foam. The total stock price you see? It's always beer plus foam. Always. The greatest investors in history, the people like Warren Buffett, built their fortunes by focusing almost entirely on beer-heavy companies. Businesses with durable advantages, strong brands, and reliable earnings that compound year after year. Think Apple, Coca-Cola, American Express. Buffett's strategy was ruthlessly simple. Buy when the foam is low and the price is less than what the beer is actually worth. Buy $1 of value for 50 cents. In today's market, those deep discounts are rare, but finding solid companies trading at a fair price is still very achievable.
Look what they tell you. Value investing, low PE ratio. Yes, GameStop. Low price to book. Yes, GameStop. High dividend yield? Well, we don't have one of those yet.
And it's still how wealth gets built. Now contrast that with foam-dominated stocks. In January 2021, GameStop surged over 1,700% in a matter of weeks. Pure foam. Driven by social media hype, not business fundamentals. Within months, the foam evaporated, and investors who bought at the peak lost 90% of their money. Foam can make you feel rich very fast. It can also wipe you out even faster. When you shift your focus from foam to beer, everything about how you invest changes. Instead of refreshing your brokerage app 30 times a day, you're asking better questions. Does this company have real earnings? Is the business growing? Is management allocating capital wisely? And here's a stat that should stop you in your tracks. Research from JP Morgan found that if you missed just the 10 best trading days in the S&P 500 over the past 20 years, your returns would be cut nearly in half. The 10 best days, out of 7,300 total trading days. And those 10 days most often occurred during periods of extreme fear, exactly when foam chasers were panic selling. The people who stayed invested in real businesses, they captured all of it. So next time you look at a stock, any stock, ask yourself one question. How much of this price is beer and how much is foam? Anchor yourself to fundamentals. Pay a fair price. Stay patient through the noise. That's not the flashy strategy you see on TikTok, but it's the one that has built more generational wealth than any other approach in history.
Good. Good. Thank you for that, by the way. They want to show you that it's GameStop that's the overvalued foamy stock. I haven't seen these guys talk. I don't know what they're going to say, so I'm going to go ahead and fast forward it at 1.5. You guys know the way we do this. Let's see what they have to say. I have not watched this video at all. Not 1 second.
I think we can start with the idea that the market cap of GameStop is, call it, $11 billion. You have $9 billion on your balance sheet. Arguably, if you're providing effectively all of your stock, and then the cash that gets you to 20, you have this letter from TD. That's another 20. We're now at 40, but we're still off by, call it, 16. And the 20, as far as I understand, while it's considered a highly confident letter, meaning TD saying they're highly confident that they provide the financing, it's not locked financing.
Yeah, we'll see what happens.
I hear you. I understand that. I'm just trying to understand where the rest of the money would come from.
It's half cash, half stock.
I hear you. I'm just saying that math doesn't get you to the price that you're offering.
So
Brian, that's a pretty straightforward question. I don't get it. Like, where's the rest of the money coming from? Andrew laid it out very clearly.
I don't understand your question. We're offering half cash, half stock, and we have the ability to.
You know what? I never told anybody. I never showed anybody that when they did this, I want you guys to see Ryan. He was about to explain it to them, but the minute this lady jumped in, he said, "The hell with you then. I'm going to just leave it alone. Watch this."
I hear you. I'm just saying that that math doesn't get you to the price that you're offering.
So,
Brian, that's a pretty straightforward question. I don't get it.
Look at him. So what are you saying? He was ready to go ahead and start explaining it to him, but she jumped in and said some dumb shit. So then he said, "The hell with it. I'm going to be dumb then."
Like, where's the rest of the money coming from? Andrew laid it out very clearly.
I don't understand your question. We're offering half cash, half stock, and we have the ability to issue stock in order to get the deal done.
What is going on, everybody, and welcome back to Bad Trader. What you just heard was GameStop CEO Ryan Cohen attempting to justify the position that GameStop has taken moving into a hostile takeover of eBay. They're looking to do a half-cash, half-stock deal. They're going to look to generate $55 billion to buy eBay with, and there's some serious question marks surrounding both where those funds are going to come from and Cohen's motivations through it all. I'm joined today by Errol Coleman and Jamal Chandler. Guys, what are we thinking about this deal? GameStop back in the news cycle again. It can't ever seem to stay out. How are we feeling?
It's a volatile one. I know last time GameStop was in the headlines, it was kind of in the meme realm, but it sounds like they're trying to get a little bit serious with an acquisition of eBay, I guess. It sounds like it's a little bit out of the woodworks. Very odd interview. I don't know what to make of it so far. What about you, Jamal?
I mean, I didn't know you could I didn't know you could act like that in the interview, honestly. I wish I would have known this. I would have done this plenty of times by now. Look, this is ridiculous. It is utterly ridiculous that they're even talking about this merger. I mean, they're $11 billion market cap. The number one thing in any merger is that you look at the size of the acquiring company and you look at the size of the company that's being acquired. I have never seen a merger where a company that
you've never seen because you're uneducated
is 5 times smaller trying to acquire that type of size of company. So just on that alone, it seems ridiculous. If you look at the options market today, you'll see that the upside calls in the near term are still at higher volume.
So a dumbass wannabe day trader. Anyway, just so that we're clear, have you ever seen an $11 billion company on market cap get a $20 billion commitment and or sitting on $9 billion cash? You ever seen that? I've never seen.
It's in the 50s, which is typical for, I guess, eBay, typically where it trades. If it were actually a takeout, you'd see it like in the 20s or in the 10s. Like it'd be basically being, it would be discounted fall because you know that there's a takeout happening, and there's nothing happening in that situation. Same thing if you look out at the leaps. There's a couple of trades, but nothing massive. Usually when there's a takeout for a certain price, say the price was 150, the 160, 170, like further upside strikes would be, they'd be trading those to the upside, and they'd be selling ball in those because they know they're not going to exist anymore. this is not happening. It's ridiculous.
Yes, I'm inclined to agree with you. Just some generational gaslighting happening in that interview as well. We can jump straight into the GameStop offer letter that Cohen mentioned at the end of that interview. He throws his hands up in the air and he says, "If you want the full details, they're in the offer letter on our website." And in this offer letter, it is exactly what CNBC was getting at there. They say in this letter, quote, "Aggregate undiluted equity value of eBay is approximately $55.5 billion based on eBay's most recently disclosed undiluted share count." Then, 2 sentences later, they say, "The cash consideration is expected to be funded from a combination of cash and liquid investments on GameStop's balance sheet, which totaled $9.4 billion as of January 31st, 2026, and third-party acquisition financing in respect of which GameStop has received a highly confident letter from TD Securities for up to $20 billion. So those are the 2 numbers.
So TD Securities must be the dumbest investors of all time. I just want to put that out there. They must be, according to everyone in this whole deal. Because how in the hell would they back GameStop with $20 billion? They're only $11 billion.
$9.4 billion and $20 billion, and GameStop is asserting that those 2 numbers add together to equal $55.5 billion. I don't see where it's coming from.
You guys are ignorant.
It doesn't make any sense.
No, I mean, he seemed pretty vague. I mean, just in the body language and the way that he was giving the answers, it almost seemed like he had something up his sleeve. Like, I know this is coming off this way, but I don't know if we start to get the green light for this, we will then have more opportunities open up to where other people would be interested, maybe to hop on board to help out financially. I have no idea, but I did see that Michael Burry tweeted out that this potential acquisition makes sense. It's difficult to read between the lines there because we do know Michael Burry owns a large amount of GameStop stock, so he's incentivized to say something like that. Nonetheless, I'm a little bit lost for words.
Yeah, it just doesn't make sense to me. Like I said, I mean, looking at the market caps, it doesn't make sense. I see Posley got some financing, but I don't know. I don't see it going through. At least as of right now, nothing options. And I don't look at eBay a ton, so I can't tell. But just looking at what I'm seeing for the upside options, I mean, again, there's still a bid to them. Like if this thing were really supposedly having a takeout, I mean, in the October 140 call, it's a little wide, but it's 190 at 345. It wouldn't even really have a bid right now. So I just don't really see it.
Yeah. Audacious, ambitious, right?
Yeah, and Cohen might
no
have
doubt.
some tricks up his sleeve here. I guess first I should acknowledge eBay has responded. They pretty much just gave a PR response saying that they will fulfill their legal obligation to look at this offer. They did not give any.
Can we talk about this mustache, bro? Like, and the fact that you guys go so up close with the camera, and just 3 uglies who don't know anything. They don't know a damn clue about investing. Trading all day, whatever you guys want to do. Investing, nothing. Keep going. Ugly 1, ugly 2, ugly 3. I don't know how you want to count it.
Bullish or bearish sort of indication as to how they're feeling about this offer, but they did not explicitly say that they don't want it, and they said that they will go through their duties to make sure that everything's in order, and they will take it under consideration. The tricky part here is that Cohen in January signed a deal which is very similar to Elon Musk's deal with Tesla, where his compensation is fully tied to GameStop's performance in the stock market and just purely their valuation. With Elon Musk's Tesla deal, there were other tranches such as robot sales, autonomous vehicle deployments, things like that. With Cohen's deal, it is purely tied to GameStop.
Hey, where's the video about the autonomous vehicle thing? You guys know about the robo-taxis for Tesla? Elon Musk reported just a month ago, says there's been 0 accidents. There now is 17 a month later. The post, it went out. There was an actual post on it and said there's 17 accidents and 7 of which are at fault. Oh, where's the bad press on that? Where's the stock price going down?
GameStop's valuation, and very notably, the valuation hurdles are not adjusted for dilution. So the quick breakdown on Cohen's deal is that there's potential for $35 billion in total compensation in GameStop stock. He earns $3.5 billion at every $10 billion increment in valuation, starting at $20 billion, so 20, 30, 40, 50, etc. The $90 billion and $100 billion valuation milestones are each worth $5.25 billion. So that is, he receives 0 guaranteed pay outside of those valuation hurdles, but they're not adjusted for dilution. So We have the current GameStop market cap at just under $11 billion. If eBay is acquired at a $55 billion valuation, if we take out the $9 billion in cash, and then if we say, which this is obviously unrealistic, that GameStop uses all $11 billion of their current valuation here, GameStop's valuation would still jump to $35 billion, which would be a $7 billion payday for Cohen. So he clearly is very motivated to make this deal happen one way or the other.
I don't know about you guys, but I feel like this is The Social Network, and that scene where you just start hearing about all the different valuations and the way what's going on with the stock, and I feel like it's that type of situation. He's going to try to figure out how to win regardless.
And I mean, lastly, on eBay's end, I'm curious to see if they want to pivot in any way, because I could imagine TikTok Shop definitely put a little bit of a dent in their competition in terms of purchasing and buying things online. I know it's a little bit of a different business model, but to that extent, I'm curious if eBay is open to pivoting and doing something a little bit interesting here. So we'll see what we get.
That'll do it for us today on Bad Trader. Thanks so much for watching. Be sure to subscribe, click that like.
Name is Bad Trader. That's awesome. Hey, look at this little munchkin. This dude was an extra in Willy Wonka and the Chocolate Factory. The Wizard of Oz. What's going on there, midget? I know you're a midget because I can look at the size of your head versus the microphone. Look at this, dude. Are you sitting on a donut for your ass? You're going to need it.
So to close out the week, there was an absolutely insane report that dropped. What?
This dude is missing his battle axe and a whole chainmail. He's got a shield I don't know about. Yes, you got the ears of a dwarf and the hair of a damn elf. How many toys do you make in your side job?
One that was so out there, people looked at it and said, is that even possible? And this has to do with
this shirt is a small. This dude ordered shirts off of Marantz Rantz, the merch at the bottom. And he goes, do you have any more mediums? I said, I do. But he's got green eyes, so you can't get mad at him. His wife does his eyebrows.
With GameStop. Now, GameStop, of course, was in the news a while ago now for the whole the meme stock situation where the stock was pumping like crazy, and there have been entire movies and stuff made on that. But then even after,
are you sure there was entire movies made on that? Movies, plural? I don't even know this dude's name, but I know his wife's name. Strawberry Shortcake. I know it.
After all of that happened, years later, it sort of happened again, and GameStop did what you would expect a company not participating in the pumping of the stock to do, and they actually cashed in themselves. And with that, they've been saying they were going to make some mergers and acquisitions. They had some plans. Well, I did not expect eBay to come up as a potential acquisition target, because I myself am wondering how that would even happen. But
this guy looks like he's related to Little Man Finance. I don't know if you guys know who that is. Little CPA that got GameStop completely wrong, got me wrong as well. But you guys already know about these CPAs and CFAs, and I don't even know what this guy is. This guy's a video game guy, isn't he? He's doing it big, though. Let's see what he's got going on. 765,000 subscribers, bro? Holy shit. My God. You had to give up inches for that. I know you did. You see that whole idea of you give up an inch for $1 million. How many inches would you give up? This dude walked in. I give up an inch for 100,000 subs, bro. I've noticed every little guy on the internet has a lot of subs. This is a little dude right here.
They seem serious, so let's take a look today. So if you guys enjoyed the video, hit the like button, subscribe if you're new. So this we can see. This is over on Fortune, and the story is coming out of Wall Street Journal, and then Reuters also had an entire report on this, saying that GameStop, led by e-commerce entrepreneur Ryan Cohen, has been building a position in the online auction.
Bro, stop talking, bro. Just cut his shit off, bro. I don't have time for all that. Been here so long already with you. I've been 2 hours of me just defending against these idiots. You thought that was Mike the Marine? Psh, bro, that guy's doing Bible verses from his barn, asking his wife for let him back in the house. Dude sleeps on a bale of hay. Hey, don't you talk about me, bro. Sure, buddy. Every pumper of every misinformation stock, I come for him, bro. but it's been a great 2 hours. For you, I'm sweating, bro. I told you I went for a run, came in here, did this shit. I gotta go take a shower. I'm gonna wash off all this bad blood, all these bad idiots, all these guys who don't know anything about investing. All right, so let's talk about this, okay? I just want to, it's cool. You have to rewatch later. Sorry, because I can. But check this out. No drop frames over here. So this whole idea of GameStop made it a bad investment. They now own 6.5%. Hedging, bros. They're hedging this investment because if you think eBay's worth more than the 125, well, then GameStop makes money. So as long as you inflate the price of eBay, inflate it, hold it up, well, then you're giving GameStop gains and profit. Remember that. If you want to tank the price of eBay, well, now you're making it more attainable. Now it's, hey, we should have took that damn deal. Is it still half stock, half cash? I do the same deal here. For those of you that support the show, that donate money for super chats and memberships and merchandise, whatever you guys do, or buy the book, I don't care what you guys do. However you support me, the show, the crew, I want to tell you something. Every dollar you pay me to be here with you, every dollar you donate, or however you want to call it, I'm not using the right words enough, all the dollars you support, I'm going to utilize those dollars to help Ryan buy eBay. We're doing half cash, half tips, and we're doing it right. So I appreciate you guys for supporting my eBay acquisition, but I'm going neck and neck with Ryan. Ryan, I'm with you, bro. I don't need to buy the shares of eBay. I buy GameStop shares inherently. That means I'm going to own eBay as well. So, yeah, I'm just going to keep buying GameStop shares. I don't know what you guys are going to do. I'm having fun, but the fun's over because I got to go. It's 9 o'clock at night on, West Coast time, Pacific Standard Time. I'm going to tell you one last time. Michael Packer has been wrong about GameStop for infinity. About investing, every investment, he's been wrong. They're wrong on purpose. They're put in front of you on purpose. Now calling Ryan a grifter, saying he's part of a pyramid scheme. The rub doesn't fit. If you could go after GameStop and their fundamentals of increase, their business model, their structure, if you could do that, Michael, if you could talk about how terrible the switch into these cards, collectibles, how that category is growing at a greater rate than hardware is declining and or software is declining. If you could talk about the cash on hand now, fundamentally how great this company is and what they offered, they have a $20 billion check waiting for them. And whatever they want to buy, someone's ready to back them with investments. The only way that would be put out there is because you have to acquire something with cash. There are investors ready to pounce right now. Will there be more? Yes. But you have to remember one thing that no one's telling you. Ryan Cohen has not even given you the full plan. Ryan Cohen is here and now, and he's going to buy eBay. He's going to take eBay. He's going to take it from them, and they can do nothing. The money is infinite with GameStop. And when GameStop shows you that they can acquire 51% of that company, they can buy a controlling stake of the company with cash right now. You better watch yourself. You better check yourself before you wreck yourself. Because like Ice Cube said, shotgun bullets are bad for your health. GameStop. Can't stop, won't stop, GameStop. I'll see you around, millionaires. Peace.